going out to save 10 cents a gallon on Iowa ethanol, and he's grasping at straws.
Well, and it comes at a time when corn prices are also high. So it's sort of pick your poison, right? If you're going to be dealing with elevated prices. It also comes, though, at a time of real perilousness, I should say, political perilousness for President Biden, considering he's got not a lot of things going for him popularity-wise heading into these midterm elections.
And Kelly, what I don't get here, I mean, to be logical about it, heaven forbid we'd be logical in Washington, the price of corn is up just like the price of gasoline. So if you pop ethanol in Iowa, you pop corn while gas is going up as well.
Well, at the end of the day, this is just a president that needs to be seen trying to do something to tame inflation, Tom. He doesn't have that much power to do so. He's tried to do that through the tapping of the Strategic Petroleum Reserve. Obviously, now he's trying to make a move on ethanol. But it's a president that honestly is running out of options at the same time that you have an American populace that would like to see the U.S. doing more on Ukraine. How far can the administration go without exacerbating in dramatic fashion the inflation problems faced here at home?
It's like the end of Raiders of the Lost Ark. There's a warehouse in Washington where they show at the end of the movie taking all the boxes of whip inflation now buttons in. They've been buried there for 40 or 38 years, whatever. Maybe it's 45 years. Get out those whip inflation now buttons. We're going to give you reporting on inflation in an hour. Make it 2 hours here. 8:30, Michael McKee leading that. Coming up on Ukraine, Julie Norman of UCL. Please stay with us. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. March may turn out to be the high watermark for inflation in the U.S. The CPI report coming out today is expected to show prices rising 8.4% from a year ago. That would be the fastest pace since 1982, and it reflects higher energy costs in the wake of Russia's invasion of Ukraine. We'll get that inflation number at 8:30 a.m. at Washington or New York time. Bloomberg's learned that India plans to boost exports to Russia by $2 billion in the wake of international sanctions. The two countries are said to be working out a payment system. Amongst the products India would ship to Russia are pharmaceuticals, plastics, and chemicals. The charity group Oxfam warns that 250 million more people will face poverty this year. The group blames the impacts of the coronavirus and soaring food prices caused by the war in Ukraine. Oxfam says a total of 860 million people will live below the $1.90 a day line by the end of 2022. And President Biden has unveiled new federal rules restricting so-called ghost guns. It's a crackdown on purchasers who assemble potentially untraceable weapons from kits. The Biden administration has been criticized for a rise in gun violence during the coronavirus pandemic. Honda plans to spend $40 billion on its push into electric vehicles over the next decade. Japan's second largest automaker says that some 30 EV models will be launched by 2030. Last June, Honda declared it would phase out sales of gasoline-powered cars completely by 2040. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
March is where we really will see and have seen the impact of President Putin's invasion of Ukraine on energy prices and other commodities. We know that because we've already seen what's happened to gas prices in the United States, and that will be reflected in what will likely be a big divergence between the headline and core.
Brian Deese, director of the U.S. National Economic Council for the president. They're managing the inflation message out of the White House. We'll have the inflation report for you here in less than 2 hours. Right now, the news flow is extraordinary. We're losing the video on Mr. Macron. And for Americans, this is extraordinary. As Mr. Macron and Madame Le Pen get out and campaign, they're in the heart of this campaign. Lisa, I've never seen this in America. He is stuck in a crowd, and some of these people, Lisa, are really giving it to the president of France.
Yeah, he's out there campaigning as the latest OpinionWay election runoff poll just came out, actually, showing that Macron led Marine Le Pen by 54 to 46%, a bigger margin than a lot of people thought heading into this election, which has been the reason why you've seen a bit more support for the euro over the past couple sessions.
We don't have sound there because I can't translate the French, and we're not going to go to Kaylee Lines on that, who's better than I am. I think that was just a rude question from our Caroline Conan as well. Just out from Russia, the central bank deals with Ukraine and deals with the financial challenges of Russia. Short paper, 7-day paper, they're giving it away in Russia for 17% is the basic idea on the Russian rate as put out moments ago. We move to Ukraine now, and we do this with truly an expert on human rights. Julie Norman is co-director of UCL Center on U.S. Politics, but her work at American University is on the heartbreak of terror and the heartbreak of human rights. Many talk it, she does it. Dr. Norman, we got to cut to the chase. You were unprepared, we were unprepared for what we see in Ukraine. Forget about The Hague, forget about war crimes. How do you respond to this in real time?
Well, Tom, it's certainly horrific, the images that we've seen, especially over this last week or two. And unfortunately, they are unlikely to stop. We're expecting even more atrocities in the next wave of the war, which will most likely take place in the East. As you mentioned, there's been a lot of discussion about war crimes trials, perhaps in the future. war crimes tribunals tend to be quite time-consuming. Even when they do take place, there's a lot of questions whether the International Criminal Court would have jurisdiction over what's happening now anyway. But the important thing to remember, too, is those type of litigation don't usually deter any actions in the moment. And so even if those were to take place later, they would not stop Putin now. So what we have to do now more is focus on how can this conflict end. As long as the conflict is continuing, I expect that we'll continue to see the kinds of atrocities that we saw, unfortunately. So that's now a kind of a double-sided coin, the diplomacy and the military side.
I need to be very delicate here, Professor Norman, and that is reports or speculation, rumor of chemical weapons being used down by the Black Sea. How do you determine that? In your academics, do you look for like canisters that the stuff was used in? Or am I thinking from World War I? How do you detect chemical weapons?
Yeah, well, it obviously depends on the type of weapon that's used, what kind of residue is left, what kind of, as you mentioned, like canisters or these kinds of things. It tends to be, again, something that is difficult to often show in the moment, especially in a situation like Mariupol, where just access to the city has been very limited. So we have heard some of these reports, but they have not been verified. It's also important to note that, again, chemical weapons take many different forms. Some we would consider, say, tear gas a form of chemical weapon, but not obviously one that is, is deadly and that kind of thing. So the scale to which a weapon has been used, usually you have to look at what actually is happening to people in that area. It usually, again, you have to have some kind of forensic evidence to show the impact, as well as actually having either residue or having canisters, something like that from things like phosphorus. But again, it's not even clear what chemical weapons has been alleged to use, much less if or where they were deployed. Right. But again, this is something that we're aware of has been a possibility.
The reason why this is so crucial is because of the potential response to the use of an escalation or something that is new and more horrific in this war. What do you expect the response to be at a time when the United Kingdom has come out and talked about NATO deployment?
Well, the UK and NATO have obviously been trying as much as they can to de-escalate the conflict, but at the same time to support Ukraine through military aid. As you noted, what would perhaps change that variable would be if there was a deployment of either a tactical nuclear weapon or a chemical weapon. NATO has been pretty close to the chest in terms of what their options would be after that. It's expected that there would be more of a robust response. But again, the alliance up until this point has been so committed to trying not to get boots on the ground, not to get this actually becoming some kind of even broader conflict. And it'll be very difficult to find that balance if indeed something like chemical weapons are used.
Professor Norman, thank you so much for joining us this morning with UCL. We've got to go with breaking news. And of course, part of this is at the Cosmodrome in the far east of Russia. Mr. Putin, with really the first sighting I've seen in ages outside the Kremlin, meeting with Mr. Lukashenko, the flag of Belarus as well. And of course, the image here, it's stage managed. For those of you on radio, clearly stage managed by Mr. Putin's people with the Russian flag in the background. We won't sit on that too much. Lisa, I've got to go back to the inflation report and what has not happened in the last 24 hours. Yields explode higher, 2.80% on the 10-year, but the real yield didn't move. And so we've got those two parts, the nominal yield exploding up and the residual, the inflation rather, doing what it does, and the residual, the real yield, is really not moved.
How much faith do people have that the Fed is going to follow up hawkish talk with hawkish walk, hawkish action? And I think this is sort of the question mark being underscored by the fact that real yields are still negative. I mean, we've been talking about the incredible move, and yet to talk about basically a Fed policy that is highly accommodative at a time when we've got inflation at the fastest pace, going back to the early 1980s, highlights the dissonance of this moment. So at what point do we see the yields moving up, not because necessarily inflation expectations are moving up, which they are, but because they do see a more restrictive policy? We haven't reached that point yet.
And Kaylee, to touch on equities as Anna Hahn comes up to start strong in the next hour, I look, Kaylee, at the equity response, and yeah, it's a little bit linked. Yesterday was ugly, I get that. But still, the disjointedness of these titanic moves in the bond market versus less than Titanic. I mean, the Dow Jones Industrial Average, I should say in Italian because John's in Capri, but 34,230 on the Dow. I'm sorry, it's not even a correction.
Yeah, and this raises a question, Tom. Is the equation for equities different if you actually do see real yields inevitably going positive? Does that throw the case for TINA into question? Will there actually be an alternative? But Tom, we also have to keep in mind, earnings season starts in full force tomorrow with JP Morgan. How much are equity investors still relying potentially on corporate profits to provide the support behind the equity market, even in the face of a Federal Reserve that is tightening?
The drawdown, Lisa, on the Dow, 6.8%. It's a crisis.
I thought you said you were channeling your inner Pharaoh. Where is that? Where is that man?
My Italian is worse than my French.
Okay, let's not try it. I was looking actually at the NASDAQ. It's lost more than twice as much as the S&P so far this year. I think that's
far away from her as possible.
Like he's in another room. Have you noticed?
Appalling. Anna Hahn, you must listen, you must watch with Wells Fargo next.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number. And most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The financial situation has been very, very positive for equities.
We're really seeing now
is an increase in volatility.
How high do rates really need to go to slow down this economy?
What QT does to financial conditions as well, that's another unknown in all of this.
The risk of recession is really no higher right now than it normally is.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. It is a different Tuesday. It is a Tuesday of extraordinary inflation. We'll have that report in 90 minutes. Michael McKee leading our coverage on the agony of a nation with 8% inflation. Lisa, it permeates every aspect of our economics, our financial life, and the day-to-day living of Americans.
The complicated issue is you talk about the pain, and it is absolutely painful for the individuals, but we're also talking about the dynamism of corporate America that kicks off tomorrow with bank earnings with JP Morgan. How much does this dissonance actually yield something that is close to a downturn versus just simply a tale of two parts of the haves and the have-nots, which has only widened post-pandemic?
And the have-nots not doing that well with global recession or American recession, that under heated debate. The World Trade Organization now gets out front of IMF, World Bank. Lisa and I will be in Washington here in a few days. And the gauging of recession worldwide is a big deal. WTO doesn't call for recession, but I can tell you folks, with every bit of work I've ever done, Lisa, 2.8% global GDP by every measurement I've ever heard models global recession.
Especially because you take a look at how big the downward revision is. It was from 4.1% to 2.8%. We have seen these types of revisions downward to global growth that have been increasingly severe. At what point do we just admit we don't know what's going on? How do you game out shocks, geopolitical shocks, or just what's going on in China with the lockdowns, and what kind of effect that will have on an economy that still is fragile past the health crisis?
And Kaylee lies within a trilateral world. I mean, I'm going to suggest with massive lockdown in China, with the war in Ukraine, seeing those images of Mr. Putin in the last hour as well, the United States is the only one left standing within the WTO's global recession.
Yeah, obviously the United States, Tom, in theory, a little bit more insulated than, say, the European economy from the situation in Russia and Ukraine. Europe could be heading for a recession regardless of whether or not an energy embargo on Russian fossil fuels is actually put into place. And what we're hearing out of the WTO echoes what the Peterson Institute put out overnight, Tom, warning of a slowdown in growth in the back end of the year. And of course, that Bank of America Global Fund Manager survey, global growth expectations are the lowest ever on record.
Using the reach of our video worldwide, we were in Russia an hour ago, and then images of Mr. Macron. We hope to bring him, Madame Le Pen, here later. This is extraordinary for Americans. This is French campaigning with medical officials in the far east of France, over by Switzerland and Germany, and Macron has stood there for at least an hour, Lisa, and done campaigning the Macron way. Extraordinary.
Well, he didn't do a lot of campaigning heading into the first round of voting, and now he's really kicking it up a notch after the closeness in the election. But the broader implication here is dramatic. People are angry about how quickly the prices of the goods that they buy are going up. This is not a story that is just isolated to France. It is global. It is in the U.S.
And this is really important, folks. The anger that you see in France isn't tourism on 3 arrondissements in Paris. This is a nation that is really in an uproar. And those wheat prices we quote from Europe are mostly derived out of Rouen, Dunkirk, and others of the agriculturally dominant and proud French. Let's go to the data real quick. I'm going to focus on bonds. We're going to do equities with Anna on here in a moment. It's real simple. 2.80%, a 10-year yield. You've seen curve inversion move to a 27 basis point steepening. Critically, the real yield has not moved negative 0.14%. Oil with a move back yesterday gives me a $4 rebound today. Brent crude 103. I could spend an hour on currency. We're not going to do that. DXY over 100 really gets your attention. In the equity market, absolutely extraordinary here, and we're going to get to that in a moment. But right now, the day is so busy, we need the brief from Lisa Abramowitz.
8:30 a.m. Let's get straight to it. It is U.S. CPI for the month of March. Some say it will be the peak. It is estimated to be 8.4%. The estimates range from 8.2% to 8.6%. 8.6% being the highest rate of inflation in consumer goods that we have seen going back to 1981. How much is this bleeding into this feeling that it will continue, that we won't basically just see a blip in inflation, but over the longer term, this will be a trajectory of more painfully high and rising prices? We see that a benchmark of 5-year to 10-year inflation has risen to the highest levels going back to 2014. How does the Fed respond? When do they become restrictive? Today, perhaps they'll address that. Fed speakers include Federal Governor Lael Brainerd, as well as Thomas Barkin of the Richmond Fed. They're going to be talking about the balance sheet, about how high they could move rates, and about the potential for breaking the economy. This has been one of the big discussion points. At what point does the economy cripple, buckle under the rate of a 3%, 3.5% 10-year Treasury yield, as some people have been speculating increasingly? And at 3:45 p.m., the political story, President Biden is going to be discussing how he plans to bring down the price of oil, gas, and also just all of these goods. And he's trying to really negotiate consumer sentiment that's fallen to the lowest since 2011. He's going to be in Iowa talking about ethanol. But Tom, to your point earlier, how do you then take some of the demand perhaps away from, or some of the pressure away from gas prices, and then put them on corn prices that frankly have also been surging and also are a serious issue for people who need to eat? I can't convey enough, folks, this surge that we're seeing in commodities worldwide, folding into that WTO report of 2.8% global GDP, really something as well. Let's jump to the equity markets. Anna Hahn joins us, equity strategist at Wells Fargo. Anna, how delinked are equities from the bond market?
Well, it was very interesting to see the move yesterday on not too much macro news. You saw equities down and, the 10-year yield soaring. So I think today what's going to be the driver is really what happens with the core CPI component. Now, that food prices, oil prices have been very volatile. That's why they're not part of the core portion. I think the market's going to be a little more forgiving for a surprise there. But what happens really with the CPI core goods versus services portion is going to be one of the main drivers.
One theme has been among a lot of equity strategists, Anna, that there has been a change in leadership in the index, and it's been moving away from big tech. We see this in the underperformance of the NASDAQ, including yesterday. Do you see this underperformance continuing? Are we seeing a true shift in leadership, or is this a head fake?
I do think it's a true shift in leadership. I think it's been coming for some time, and that's why we've been positioned in that way. Now, it can be frightening because when you think about how much tech as a general sector is in terms of not just market cap of the S&P 500, but also how much EPS it accounts for when it comes to earnings of the index. It's a big amount. So the question remains really, can the market still go higher even if such a large portion of the market is perhaps not the most in favor? But we have to keep in mind we can't just lump together all of tech. I think in particular what's been underperforming is the more expensive portions of it. So we can still pick and choose within. We just have to be a little more careful.
Well, and obviously when we're talking about tech, some of those high growth companies, a lot of those are large caps. You think the small caps could actually find some relief in the near term as earnings season gets underway? Anna, why?
I think there is an opportunity, but again, I think you have to be careful where this is not just looking for value there in the tech sector. What we have noticed, especially when we look at earnings transcripts and we look at corporate calls, is that larger corporations tend to have an easier time offsetting some of those inflationary cost pressures, some of those increasing labor prices. But at the same time, some of the smaller companies have been able to do so as well, just on a broader basis. Smaller companies sometimes have a little bit of a weaker hand. So there's definitely opportunity. But again, I think we need to lean towards quality as you go smaller in cap.
Anna, how hard is it right now to make calls?
It is difficult, the volatility with this market. But to be fair, I think broader picture, there's not too much that has, aggressively shifted, but we continue to add to our equation here. We continue to tweak our models and adjust. For example, the recessionary or probability of recession this year or next year going a bit higher, it increases our tail risks. Now, that's something we have to account for, but it doesn't completely shift our picture from black to white.
Anna Hahn, thank you so much. Greatly appreciated. Too short a visit. We need to do this much, much longer. Again, the dynamics of the equity markets. Lisa, I really need to focus on inflation right now. And boy, is a script change in a year from, well, goods inflation, when's it going to come back? And services, this and that. And now there's just a desperation of 4 and 5 standard deviation moves.
Well, we had the pandemic shock, and now we have conflict shock. And how much do we deal with something that eventually will change? Are we going to not be in crisis at some point? I really hope so. I think a lot of people would hope so. But we're dealing with the fact that we have not gotten rid of COVID, and we're still dealing with the supply chain issues and disruptions in China, as the WTO is mentioning, at the same time that you're also getting increases in the prices of fertilizer and corn and wheat and oil and gas because of what's going on in Ukraine. And honestly, how do you even wrap your mind around this as you add one thing after another?
And the other thing that's disappeared here is the idea of a glide path back. Now, granted, many of our guest folks suggest the inflation will ebb over time. But Kaylee, ebb to what? 4%? 5%, 2%, the jury's out.
Yeah, that's the multi-trillion-dollar question, Tom. Even if the March CPI data represents the peak, when we talk about inflation rolling over, to what extent really are we talking about, given the persistence of some of these supply-side challenges that Lisa is talking about? 2% inflation, Tom? How far away is that really?
Yeah, well, you're going to have to see here. And look what it's going to do to tuition. I think of different schools, and then of course there's the wonderful schools of New York City. I look at the stellar schools in New York City like Stuyvesant. They are a bargain compared to what mere mortals are paying.
I know what you're talking about.
Little inside baseball there, folks, on a day of celebration on education here at Bloomberg Surveillance. One of our offspring into Stuyvesant. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden will allow expanded sales of higher ethanol gasoline in an attempt to lower fuel prices. He'll make the announcement today during a visit to an ethanol mill in Iowa. Ethanol is commonly made from corn. The White House estimates that using the higher ethanol gas could save drivers 10 cents a gallon. Ukraine expects Russia to widen its offensive in the eastern part of the country this week. That echoes a U.S. warning, which also predicted a, quote, more protracted and a very bloody phase of the war. In the city of Mariupol, the mayor says that more than 10,000 civilians have died since the invasion. In Shanghai, the U.S. has ordered all non-emergency staff at its consulate to leave China. That led to a rebuke from Beijing, which called the move a political smear on China's virus policy. Most of Shanghai's residents were restricted to their homes for at least 2 weeks. Still, some restrictions have been eased, and residents report great access to supplies. Sri Lanka is taking an extraordinary step to save its dwindling pile of dollars for essential food and fuel imports. The government is suspending payments on some foreign debt and warned creditors of possible default. There have been widespread protests in Sri Lanka against 20% inflation and daily electricity outages. Small business optimism in the U.S. has fallen for a third month to an almost 2-year low. That's according to the National Federation of Independent Business. Almost a third call inflation their biggest operations challenge. 72% of the businesses have raised prices. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Season is coming.
The bar is pretty high.
We're going to see lower earnings growth.
The sentiment on financials has been pretty dour.
Bloomberg breaks the numbers first.
Tesla's gaining on record deliveries for the first quarter.
The industrial sector is getting hit pretty hard.
Every tick down is a big deal.
With exclusive expert analysis.
There are a couple of things that concern us.
We have to break out a different playbook.
There are opportunities out there.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Just got off the phone with Ambassador Nicholas Burns, and he told me the situation is very dire in Shanghai, and he made the call that non-essential workers should be able to go home, and it's the right thing to do. It's very clear to him and other parts of China as well.
An important interview. That's what we like to do at Bloomberg. The gentleman from Montana, Senator Baucus, with his public service to the nation, a long and important tenure, is ambassador to China. Max Baucus there. You can see that out digital. Again, a really, really important moment. We follow Stronger with Enda Curran, living the life in Hong Kong and all of the emotion of the last number of years. And Lisa's got a lot of discussions on this lockdown. I need to go to you on the WTO. I sat in Hong Kong with Jimmy Chang a zillion years ago with China, the WTO, and the enthusiasm of globalization. WTO looks for sub 3% global GDP, which by my Hong Kong textbooks is a global recession. How does China react to a sub 3% global GDP?
Well, China's exports have been going gangbusters since the pandemic began, Tom, as you know, record trade surplus with the US, for example. So they have been relying on exports as a pillar of growth for the recovery, given the consumer on the ground, of course, remained somewhat subdued. But now, with this downturn that the WTO are talking about, that will certainly unnerve Chinese manufacturers. There was already an expectation demand would cool as Western shoppers bought less goods and started shifting to services. And now, of course, we have the complication of the Russian invasion of Ukraine and what it means for commodity prices. And on the ground, of course, in China, with these rolling COVID lockdowns, that's bound to have some spillover to logistics and supply chains, especially seaborne. So, yeah, when you stack it all together, when you see that WTO forecast, it does suggest downward pressure on China's manufacturers, and maybe the gloss will come off that export boom this year.
And how much are we actually looking at social unrest in China? We hear about having issues with food, having complaints about lockdowns that don't seem related to science. How far has this gone?
There certainly has been discontent on social media, especially about the lockdown in Shanghai, Lisa, no doubt about it. Obviously, the authorities do control and do censor what is allowed to go on social media there, but it's a snapshot of the growing frustration, I think, in China. Of course, the authorities say that it's needed to protect our hospital system, to protect our elderly. There's a low vaccination rate there, and of course, to protect the economy. But at the same time, I think there's growing scrutiny on how much economic damage these rolling lockdowns are doing. And Premier Li Ka-shing was out today for the third time, actually, in the past week, warning about the hit to the economy. And he's saying there now needs to be a sense of urgency in terms of the support measures that are needed for the economy, tax cuts and more spending on infrastructure. Now, the government isn't pivoting from this dynamic zero approach. Despite all of that, they're sticking to it. We know there's a political reason why they want that stability ahead of the party congress at the end of the year, but they seem to be riding through the discontent at the moment and determined to bring these cases under control again.
And can you elaborate on that stability ahead of later this year? What stability are they talking about, given the fact that a lot of people are saying that this policy is breeding instability right now, at least in chat forums and in the social sentiment?
So towards the end of last year, at the big important economic policy meetings and other policy meetings in China, the word stability was used quite a bit, and that's because around October and November of this year will be the party congress, when President Xi Jinping is expected to get another term in office, and on a third term, in fact. So the thinking was keep the economy stable, keep external relations stable, and keep things on an even keel. But obviously that's being tested now on so many fronts. Russia's invasion of Ukraine has put China's relations with Russia in the spotlight, and of course triggered a lot of spillover inflation in commodity markets. On the ground, like you mentioned, this rolling dynamic zero, COVID zero approach to containing the virus is obviously causing a lot of disruption to people on the ground. So when you take it together, there's a lot of pressure swirling around the government just when it least needs it. It's, they are managing it so far, it must be said. I mean, there's a chance that these infections will come under control in a few weeks, of course, but nonetheless, there's a lot of pressure on the government strategy right now.
Well, let's talk about the government's role, or the policy role, in then stabilizing, potentially shoring up the economy. And there's a lot of speculation around that. What is the real expectation in terms of easier policy coming from China?
Well, Nomura was out today talking about the risk of a contraction in the second quarter. In fact, what they were saying is that the world isn't paying enough attention to the economic slowdown in China because of what's going on, of course, with Russia and Ukraine and the Fed rate hikes. So, as I mentioned earlier, there's now a sense of urgency. That was the word used by Premier Li Ka-shing today. He was out saying they've got to get on with it. That will be tax cuts for businesses. It will be more spending on infrastructure bonds and more borrowing at the provincial government level to get shovel-ready projects up and running. And there will be other measures along the way to try and stoke consumer demand as well. And the central bank will probably bring down interest rates. So there's no doubt that the authorities seem to be now coming off the sidelines. As I say to you, Nomura warning of a contraction in the second quarter won't go unnoticed. And some economists say that they might even go much bigger on the stimulus story than expected because they have to hit that 5.5% growth target for this year.
Well, good luck with that, given what WTO says. And, of course, we'll see what IMF Global Economic Outlook looks like here in a few days. And to Curran, thank you so much, in Hong Kong. Lisa Bramlett and I, of course, at the World Bank and International Monetary Fund meetings. And that always kicks off, I believe, Lisa, tomorrow we should see the World Economic Outlook as WTO front runs IMF here. And, of course, all in all, it'll be interesting to see. A mystery solved, Lisa, this morning. These are the investment in active managing giants of Los Angeles Capital Group. They unloaded Barclays a few days ago. Stephen Aarons and Swetha Gopinath reporting that Capital Group is the mystery seller of Deutsche Bank and Commerce Bank today. And of course, Lisa, what's interesting about all these big stocks is the top 5 holdings now are index funds. That's not Capital Group.
I love that the headline says the mystery seller, no more, right? But the whole idea here is how much are people trying to abandon some of their calls on the European banking sector? And how do they do it in bulk if they shift their views at a time when there is such a polarized feeling? And frankly, people have been raising issues about liquidity in the market. So that's the reason why it's been such an interesting moment, especially considering that some of the European banks have been under.
And Kayla, I really want to emphasize here, and this is something I think for the modern investor is unknown. There used to be a thing called dominant active management. How quaint. And that is Capital Group. And the idea here that they're it's simple. They're unloading Europe, right?
Yeah, it seems that way, Tom. And it raises a question. The outlook for European banks, especially as we have an ECB that may not sit out this tightening cycle. We're talking about a central bank that in theory could be hiking rates by the end of the year. Shouldn't that help the European banks?
I don't know. It seems like a time maybe to talk to David Harrow as well with what he's done, the great international investor. Oh, I'm looking at Credit Suisse. Mr. Harrow, Credit Suisse is not playing as well as the Milwaukee Brewers. Right on the screen, just a touch. Stay with us. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Good morning, everyone. Bloomberg surveillance, terrific news flow this morning. Mr. Putin, a sighting in the Far East of Russia. Mr. Macron campaigning. We have Ms. Le Pen later on, we believe, around the time of this inflation report. This Tuesday in inflation, and all you need to know, yields are up, and the rate of change is there. And Lisa Bramwitz, do the data check with me, and let's do it in yields. 2.79% on the 10-year yield. Curve inversion has disappeared. And Lisa, the acclaimed Bramo drawdown is a minus 13%. Lisa, this is the Lehman, the Bloomberg credit total return aggregate index. Wow, minus 13% from the end of 2020.
13% in credit land is way more than 13% in equity land. Just to put this into perspective, that is a sea change for people who look for full faith in credit, not only in the government bond market, but also in companies that are the behemoths that have gotten, frankly, pummeled that much more. At what point does this change the calculus for investors versus, frankly, be an opportunity? And I think this is really the discussion to have. As we watch 10-year yields today surpass 2.8%, they've come down from that point. At what point do people start seeing value versus something different, Tom, based on the inflation rate that we're seeing today?
Please stay with us for the next hour on radio and television. The other number of our data check is 8.4%. The inflation report in 1 hour. On the equity space, Romain Bostic. Romain, good morning.
Hey, good morning, Tom. Of course, as we await that CPI data, you take a look at some of the individual movers out there, sort of back to the future, end of the era for AT&T, closing off what is essentially separating that Time Warner Media business, a business, of course, that it took on 4 years ago after a bruising 2-year battle with regulators to get it done. There's a great read on the Bloomberg terminal today by Lucas Shaw, which sort of shows all the missteps that AT&T took in trying to build out that media operation and why it's refocusing now as a pure telecom play. Investors seem to like that. The shares were up more than 7% yesterday. They're higher just by about 0.3% here in the pre-market. And as we look forward to the new earnings season here for Q1, the last remnants of Q4 earnings reports are trickling in. CarMax coming out with its earnings report. The EPS, a big miss. The street was actually looking for a gain in EPS. You actually saw a contraction in that. The street was looking for a gain in unit sales. You actually saw a contraction in that. Those shares down 2%. Some of the other publicly traded car makers, car sellers, including Carvana, down as well. Carvana down about 3.4%. Elsewhere, Tom, I know you love analyst upgrades and downgrades. You're getting an upgrade today on CrowdStrike. The war in Ukraine putting a lot more focus on cybersecurity stocks. Goldman Sachs upgrading that stock to buy. Meanwhile, two interesting downgrades. Morgan Stanley downgrading Hewlett-Packard Enterprise down 3.5%, saying the demand for networking and telecom equipment actually showing a certain degree of softness. And the sell side folks at Citi downgrading Cisco all the way to sell here. Those shares down 2.6%. Citi analysts saying that Juniper, Arista, and some of the other competitors continue to eat the lunch of Cisco.
The View 40, and of course, earnings tomorrow, JP Morgan, then on to Goldman Sachs on our trip to Washington on Thursday. Romain Bostic, the close this afternoon. Right now, to bring you up to date on the dynamics of this bond market, this original space, Robert Tipp joins us, Chief Investment Strategist, Head of all global bonds at PGIM Fixed Income. How much blood's on the street, Robert? Let me cut to the chase. Price down means money's being lost. How much?
A tremendous amount. I mean, this is a record move in bond yields we haven't seen for 30 years plus, and an even greater drop in price because you're starting from low yields, which means prices are more sensitive to yield movement. So it's been a tough period, and we've really jumped the rails in terms of growth and inflation. And investors have gone a long way towards handicapping that right here. And we're kind of at a weighing station in the market at this point. You can see today that I think in the price action, where the market is rallying in the face of what we've been warned by the president, is going to be a high inflation number. So suggesting the market is pretty oversold here, at least short term.
Okay, oversold. Does that mean that you're buying?
Yeah, I mean, we don't discuss client accounts and short-term activity. I think, though, it's reasonable to expect, this is what you typically get in these cycles, is that after the market has gotten, say, 250, 300 basis points ahead of the Fed, the market is that far ahead in terms of pricing in rate hikes, it's typical to get a drop in volatility, a consolidation in rates, and even a consolidation in the risk markets. In other words, some retracement tighter, some improvement in performance, while the market waits for the Fed to catch up and then reevaluates what's going to be the next step in this process.
So you're not exactly a screaming bull here. I mean, basically, what I'm hearing from you, and this is something that I've been giving a lot of thought to, is that if suddenly we had been talking about how yields of 2.8% on the 10-year would break the market, would break the economy, they are not, and that is because growth is as fast as it is. What kind of message does that send you over the longer term about how much higher yields can go than people previously were expecting? Basically, the threshold has gone up dramatically because of the growth picture.
Right. So I think there are a number of steps here. First one, on your comment that you can't get a big rally here, you can't be very optimistic here. I'll remind you last year that in the midst of what was a strong economy and high inflation, the 10-year rallied from 185 down to 115, only to then turn around and have to reprice for what we have now. So I think it's, you don't want to jump to the conclusion that this is going to be a one-way, much higher in yields from here. In terms of breaking the economy, though, you're looking at a housing market that is incredibly strong with very strong price appreciation and some underlying micro demographics that are boosting activity. And so as a result, having your mortgage rate go up to 5%, it's not clear that's going to break it. Corporate performance has been very strong, and it's very common that a rise in rates does not necessarily kill the earnings per share outlook for equities. And so I think you're looking at a very strong economy with very high nominal growth. And that's why it's able to tolerate the interest rates increases that we've seen so far and may be able to tolerate more.
Is that the signal you're taking from a yield curve that has steepened back out to north of 25 basis points?
I think the part of the yield curve to look at, and Chairman Powell, I think, tried to direct us to this, and other Fed research has as well, is the first 2 years of the curve. The first 2 years of the curve is incredibly steep. And when that's the case, in other words, the 300 basis points, of rate hikes from the start of the cycle, that is a sign the Fed's going to be raising rates because the economy looks good and they have runway to do so. That's the part that's typically a good indicator on the economy. The 2s-10s curve is signaling that after they get there, the market is banking on a soft landing. That is not going to be the important call, I don't think, until at least 6, if not 12 to 24 months down the road. Once they've taken up some of the slack on the front end of the curve, then the markets, I think, will be in the right place to reevaluate whether there's a recession or not coming. But I think it's way too early, and that the part of the curve to look at is the first couple of years, not the 2s-10s.
All right, so you're looking more where the Fed is looking. How do you think the Fed is viewing real yields that are still negative, and how credible the market seems to believe that it is?
Yeah, I think there's so many moving parts here that investors are, much better off looking at nominal yields, looking at overall conditions and whether they're tight or loose, and then letting the break-evens, the expected inflation rates, and letting the real yields drop out. Because right now, with inflation at, let's say it's 8% and a 38 basis point Fed funds rate, you're looking at almost a negative 7% real yield at the front end of the curve. That's going to distort the entire curve. The liquidity of the TIPS market will compound that. And some of the dedicated investor base market segmentation will distort that as well. So I think going right to the real yields is the most confusing way to try to unravel it.
Robert Tip, thank you for that. Totally agree there on the residual focus is a little bit out of whack, and you got to look at a more complex analysis of inflation-adjusted yields. Mr. Tip, of course, with PGIM. This is important, and it gets us out front of the earnings to come. Lisa, we're going to see a lot of comparisons, not to the pandemic, but back to 2019. American Airlines gets us started in this earnings week. I guess they're on the back end of it, but they announced that their revenue statistic is about 16% under early 2019. I did a quick eyeball at JP Morgan, and somewhat, it's not an exact comparison. It's sort of apples to avocados. I want to be careful here, but it's about up 5% for JP Morgan. But that gives you an idea of what we're going to see in earnings season. Forget the pandemic. How are we doing versus 2019?
And the why behind that is going to be what I find most interesting. It's not because people don't want to fly. Perhaps it's because they can't hire enough pilots. They can't hire enough people to be flight attendants. They can't get enough flights because they are worried about how much they're paying for gas and how quickly they can hike the prices. There are all of these frictions in some of these service sectors that really are persisting in ways that really went far beyond people's expectations. How much will that be the driver of the declines in revenue?
And Kaylee, what the mystery here is, to me, is beyond the banks. We're going to do a big splash here, folks, with the banks. Lisa and I will be in Washington for Goldman Sachs, which is interesting. But, you know, Kaylee, it's about all the other sectors. And it's going to be this look back to 2019.
Yeah, absolutely. And the look forward, of course, as always, is also going to matter, Tom. It's not less so about what happened in the first quarter. As we've seen inflationary forces picking up, what does the outlook look like going forward in terms of pricing power that these companies are able to exhibit? How much can they retain margin in the face of higher input costs? All of that going to be very, very important to watch this earnings season, which, of course, is kicking off in earnest less than 24 hours from now.
Well, less than 24 hours. How about 50 minutes from now, Lisa? We got to get back to Inflation Tuesday, as we should be calling
the funny thing is that people are saying we don't care, right? This is already baked in. If it's 8.6% or 8.2%, we don't care. Is that really true? Do you buy that?
No, I do not. Based on what I've observed recently, we don't care becomes, oh, look, when you look at the Bloomberg. I mean, 2.78% in the 10-year. What if we get 8.6%? What if we get 8.2%? I mean, what if we get 7.9%?
What if we get 13.6%? Let's just throw numbers out.
Oh, listen, you know, the gloom is...
It's not, you know, I'm just making it up, obviously.
Yeah. No, there's no gloom on Capri for John Farrell.
That's why he's there. Not here.
On the global statistic of recession, Seth Carpenter, Morgan Stanley, coming up. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. March may turn out to be the high watermark for inflation in the US. The CPI report coming out today is expected to show prices rising 8.4% from a year ago. That would be the fastest pace since 1982, and it reflects higher energy costs in the wake of Russia's invasion of Ukraine. We'll get those inflation numbers at 8:30 a.m. New York time. Bloomberg's learned that India plans to boost exports to Russia by $2 billion in the wake of international sanctions. The two countries are said to be working out a payment system amongst the products India would ship to Russia of pharmaceuticals, plastics, and chemicals. And President Biden has unveiled new federal rules restricting so-called ghost guns. It's a crackdown on purchasers who assemble potentially untraceable weapons from kits. The Biden administration has been criticized for a rise in gun violence during the coronavirus pandemic. A Citigroup analyst estimates that Apple may be about to announce a share buyback of as much as $90 billion. Jim Suva, who also says the iPhone maker may boost its dividend by up to 10%. Apple's second quarter results are due after the closing bell, April 28th. The company has more than $200 billion in cash on its balance sheet. And Honda plans to spend $40 billion on its push into electric vehicles over the next decade. Japan's second largest automaker said that some 30 EV models will be launched by 2030. Last June, Honda declared it would phase out sales of gasoline-powered cars completely by 2040. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is the first stage of a demand destruction cycle. As you start to see energy prices in particular rising, these are a very visible price, that's something that consumers are very sensitive to, you are seeing people change their consumer behavior.
I will not mince words. That is the most important video of the day. We will play that again across surveillance, including even tomorrow. Paul Donovan, Global Chief Economist at UBS, out front on the microeconomic foundations of this unique moment we're living. If you get 5% mortgage rates, Lisa Abramowitz, I think you get some form of happy demand destruction, don't you?
Happy demand destruction. I don't know if I'd use the word happy. I think people would use other adjectives. And then you've got people like, you know, theoretically, who are looking for apartments in New York City who can't find any inventory, which is the reason why prices haven't gone down as quickly as some people would like to see.
There it is. Paul Donovan there with an important comment. We welcome all of you on radio and television here, 45 minutes from a really historic inflation report. In the equity market, Kriti Gupta went large on the Amazon deal yesterday, $12.5 billion. She took to equities this morning. Kriti, what do you have?
Well, we do equities, and we'll build on Paul Donovan's point here. If you're starting to see demand destruction, essentially a change in consumer behavior, what do companies do with that? And that's really going to be a big theme as we go into earnings season. That does kick off tomorrow with JP Morgan. A big question is going to be, with the amount of cash that are on these balance sheets, not just with tech, but across these sectors, where does that cash go if you are expecting inflation? And the answer, at least in the last couple of months, has been buybacks. You have seen record buybacks as you start to see S&P 500 companies really flush with cash. And that's what my chart of the day is really showing. For our radio audience, what you need to know is we're looking at a huge steepness when it comes to those buybacks. You should definitely look this up when you get a chance. This is really important as we talk about where else they could actually be spending that money. Is it capital expenditure? Is it investing in your staff, more labor, more supply chain issues? Those are all going to be the questions as we tackle earnings season this time around.
Kriti Gupta, thank you so much. News flow this morning, extraordinary. Again, we're steeled for the inflation report. The 10-year yield, 2.77%. Slight equity lift. You get lucky in your bookings when the booking team is as good as Team Surveillance. We bookmark champion here to talk talk to us about his wonderful continental perspective of Europe on Ukraine. But instead, as Mark Champion knows, I will rip up the script. And Mark, I will speak of Mr. Putin in the Far East, really the first sighting away from that long table at the Kremlin. Mr. Putin talking space flight, lunar, with Mr. Lukashenko of Belarus. And Reuters has out some of the comments in Russian. Putin says goals clear and noble. Putin says it was the right decision. And we saw this from the comments of Austria in meeting Mr. Putin yesterday. There's no give way here from Russia, is there?
None at all. And essentially what we're seeing is Russia saying, okay, we are a little surprised by the strength of the response of the West to the war in Ukraine, but we are absolutely not stepping back, and we have friends elsewhere. We are capable, strong enough on our own to continue without any kind of partnership with the West. And it's an extremely unapologetic and important speech, actually. You know, even talking about being able to continue with the space program and so on. This is, you know, Russia, Putin just insisting that he can continue and that he really doesn't need the West to do that.
What do you make, Mark, of the reports in the last 24, even 30 hours of not a purge? I think that is too cinematic, if you will. But he's moving people aside, which frankly, folks, you see in every war. People get moved out, new people come in. Discuss that within the Kremlin.
Well, I think there's a couple of moments here. One is that he importantly put in place a different general in charge. He's a general who's, from the south, from the Caucasus region, close to Ukraine, was very involved. He's under sanctions over his involvement with the annexation of Crimea in 2014. So this is a general who knows the terrain. He knows it very well. And people have focused on the fact that he served in Syria. Basically, all of the Russian generals by this time have served in Syria. But he, that is an important moment. As you say, in a military campaign, that sort of thing happens. There have been some other shuffles where he pushed aside or arrested even some of the intelligence officers, and that basically seems to be about having been misinformed before the war, and basing a whole military strategy which was disastrous on that bad information. So a couple of things going on there.
Mark, when we talk about what Vladimir Putin characterizes as noble goals, those noble goals have shifted over the past few weeks, at least if you consider what Lavrov has said, Sergei Lavrov has said. How much are we looking at annexing off the eastern part of Ukraine as the noble goal? And I put it in quotes to use Vladimir Putin's words, rather than a full takeover, regime change, some of the other issues that really were put out there at the beginning of the conflict.
I think the Volodymyr Zelensky, the Ukrainian president, was probably right when he said they haven't changed their goals. We have to assume, at least, that they haven't changed their goals. What they've done is to, probably go about the military campaign the way that they should have at the start, which was to go where they had the shortest logistics, to concentrate their forces, to win and consolidate, and after that, to go further and to be more ambitious. So, it's difficult. They have the noble goal is, their claim that they've started this war in order to protect Russian speakers in the East.
Mark, I want to get this in. I don't mean to interrupt, but I just allow bringing us the translations of Mr. Putin's comments in the Far East of Russia, and these are absolutely stunning, Mark. These will be the headlines tomorrow. On neo-Nazism, this neo-Nazism became a fact of life of quite a big country close to us. Mr. Putin goes on to say, and folks, this is in translation, he talks further down about Nazism. The thing we do, on one hand, we help people, saving them from Nazism. This still plays, Mark. These are stunning comments.
Well, it's more shocking to us listening to it coming from Putin now than it would be to Russians, because that has been the line on Russian TV throughout. It is wall-to-wall, 24/7, and that is the language that's being used. And it's been actually becoming stronger as the war has continued. So that is how Putin has positioned the war at home, and this is him telling the rest of the world that we're not ashamed of it. We agree. Right. This is what we believe.
Mark, thank you so much for your perspective here on these important comments from Mr. Putin in this time of war. We need to say thank you for our team, the Associated Press, and of course Justin Lau for that Russian translation as well. Lisa, we got to go to a half hour now. We got to go back to economics, finance, and investment. I am just not adjusted to 8.4%. It puts a huge part of America flat on their back.
And have we seen this really translate into the economic growth slowing down? Not yet. At what point will it, or can the momentum that we're seeing sustain 8.4% inflation, Tom?
Another hour. Kaylee Lines in for Jonathan Farrell. Lisa Abramowitz with us as well as always, and just thrilled to bring you forward on economics, finance, investment. Stay with us.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
still in a booming economy, even if we're concerned about profit margins.
So where we are now, I think, is in a pretty rapid and ongoing repricing in fixed income.
Can the Fed slow the economy, cool the economy, have a soft landing without creating a recession?
The markets underestimate the extent to which the Fed can go without breaking the economy.
Growth remains relatively solid in the US, and really inflation and inflation data is absolutely critical now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is the countdown to a new dawn of inflation. Good morning. This is Bloomberg Surveillance on Bloomberg Radio, on Bloomberg Television. Jonathan Farrow, Tom Keene, and Lisa Abramowitz. John Farrow off today. Of course, our Kaylee lines very much in, and thank you for that. We are about 30 minutes away from a new statistic, Tom. 8% is the threshold that we are going to be crossing for the first time since the early 1980s in an inflationary shock.
Right.
Now what?
Lisa, you nailed it. And this is my fault. I am wrong here in that I'm like, oh, yeah, we've seen this before. What percentage of America, Lisa, has never seen this statistic?
How does this translate to a shift in consumer behavior, a shift in consumer perception, a shift in businesses that so far have been growing quickly enough to sustain what is expected to be 8.4% consumer price inflation for the month of March, Tom?
Well, it's 8.4%, and yes, the makeup's going to matter, and I'm going to leave it to Michael McKee to tell me what the Fed looks at. There's a trim Dallas, there's a trim this. Now, I'm not in trim, but, you know, the answer is PCE matters, and that, to the American public, Lisa, that doesn't matter. It's stunning inflation.
And Kaylee, we're talking this week about the U.S. right now, but heading into the ECB and, frankly, the IMF discussions on Thursday as we look at not just inflation in the U.S., but globally at a time when the U.S. Has the momentum that the rest of the world does not. What kind of bleed over into the rest of the world are we seeing at a time when Sri Lanka is saying that they're going to halt dollar payments on their bonds in order to save money for food and for energy?
You're starting to see inflation becoming a political crisis. It is almost Arab Spring-esque, Lisa, in that you're starting to see higher prices leading to actual unrest in some of these countries. Sri Lanka is not alone in it. And of course, when we're talking about food prices globally that are moving higher, we all know where that led us back during the Arab Spring. So I think it is an excellent question. Even if the U.S. economy can be more resilient in the face of these higher prices, can the rest of the world do the same? I'm not sure that the answer to that question is yes.
And honestly, Tom, this goes to the dollar as well, right? We've seen the dollar strengthen as people start to talk about possibly waning growth in the rest of the world. Again, at what point does something break? We are moving at a historic pace. And this, I think, is important. Not only are we seeing historic numbers, but historic pace. And frankly, risk assets, yes, they have wobbled. Yes, the NASDAQ is down 14% this year. But today, once again, resilience ahead of those earnings that kick off tomorrow.
I want to do the data here and jump into the span of the video we're seeing today around this world. And I guess it is on inflation. The dollar stronger, DXY over 100. A euro breaks down from 109. Weak euro fractionally this morning. Green on the screen in the equity market. Futures up fractional. But critically, in the last 3 days, the VIX 22 out to 24 on the VIX, 24.14 in a churning market. As you showed you Mr. Macron earlier and mentioned European wheat prices out 6 standard deviations. This is Marine Le Pen, of course, and Vernon. I think I have that right. Ms. Lyons will correct me if I'm wrong. But the answer is, this is Marine Le Pen speaking of her approach, which you have to believe, Kaylee, will go to the center here in the coming days to April 24th.
Absolutely. All that focus on the cost of living crisis, Tom. And again, what we look at France, the political consequences of higher inflation, that is something that ripples throughout the world, including here in the U.S. as we get closer and closer to those midterm elections. And the president attempts to be seen doing something to rein in the pressures that Americans are feeling at the gas pump.
And certainly the pressure is to get out of town. Vernon on the Seine on the way to Rouen and onto the English Channel as well. Le Pen and Macron as far away from Paris this morning as they can get. Jim Paulson is as far away from New York as he can get. He's out rooting for the Minnesota Twins and joins us now with perspective. Jim, I got to go to the Midwest with you this morning. I think it's very, very important. The agricultural reality of this economy. Is it a boom for agriculture and Midwest farmers?
I think it is, Tom. I think that's generally been the case historically as well. I grew up in the great state of Iowa, and the best decade ever in the great state of Iowa when I was a kid was the 1970s, and all the farm kids had pickup trucks, new pickup trucks they were driving to school. It was a boom, and I think that's the case here in Minnesota as well, in the Midwest in general. You know, it's certainly noticeable to consumers here, just like it is everywhere across the country. Wherever you go, you're paying more. But for the farm community, you know, I think it's going to be a boon.
The upsides are what are really offsetting the downsides, at least in the United States. And this is what's really caught a lot of people off guard, that frankly, this is not breaking the economy just yet, even if we see the 2.8% 10-year yield, because of how much good there is, right? Because of those positive attributes of inflation, and frankly, the other side of it, higher prices that people are earning. How much are we dancing on the head of the pin? How long can this moment last?
Well, I think that, you know, if we're going to continue to have 8% going to 10% inflation, not very long. I think that rates will have to scream even higher, and if it's persistent inflation at this level, then a 280 10-year is nowhere close to where it needs to be. When we first hit 8% inflation in 1970, the 10-year was breaking through 6%, for example, and ultimately went a lot higher in that decade. I still think, though, this is likely to roll over in the second half of this year, and we might be seeing this morning the peak in CPI inflation rate here in the month of March overall. The other thing to think about here is inflation's a product of both demand and supply. And yes, demand has got to slow down. We have excess supply. But what's very different in this cycle to me is we have a chronic supply shortage. Usually with inflations, we have excess supply and excess demand. We just have stronger demand than supply. But the reason that's important is when both are at excess, there's not much room to improve supply. All you got left is to destroy demand, to bring it down. We have a different possibility here in that inflation, as you said, causing consumers to be more conservative. But we're also got the chance to lift supply, and that's starting to happen. I think the most encouraging aspect of late, in the last 5 months now, we've seen the U.S. labor force grow at a 4.2% annualized pace after basically growing less than 0.5% most of the time since the pandemic. That is a big deal. A big surge in the labor supply going into the third year of recovery is going to help supply chain problems across the country. So we're going to address this inflation problem not only by bringing demand down with slower overall demand growth, but by lifting supply. And if we do that, we could have a much better chance at a soft landing than we could in normal times.
Okay, so soft landing when it comes to the broader economic picture. Boil it down to how that translates into a thesis for corporate earnings, Jim.
Well, I think corporate earnings are going to remain fairly strong. I think the economy, as you said, is very strong, and yes, we're slowing it down from what it was last year, but it's still very strong. Just put this in perspective a minute. If you look back to 2016, at the end of 2016, we had 2% real GDP growth. We had 2% inflation. We had 2.6% 10-year yield. And we had a valuation forward multiple on the S&P of 19.2 times earnings. Today, we got a forward valuation about 19.6, 19.8 in the same ballpark. We have a yield that's 275, 280 in the same ballpark. Yes, we have higher inflation, but we also have a real growth rate that's 2.5 times stronger than we did back then. Nominal growth is 3 times stronger. Real growth is 2.5 times stronger, and we're selling at the same valuation and the same bond yield. I don't think a 280 yield is that challenging for equities when you're growing 2.5 to 3 times faster than we were back then. So nominal growth being higher means earnings are probably also going to grow stronger this year. I still think we're going to get a 240 number by the end of the year.
Jim Paulson, thank you. With Lutho Group and always the optimism there of a strident and strong America. Lisa, I'm looking here with a nice lift in the market here. Futures up 10, Dow futures up 49. The VIX from a 24 comes in to a 23 handle. Lisa, I think politically this is fascinating. Marine Le Pen speaking in France and Arsène Algerini out of Paris talking about the Le Pen approach, which is the arch daughter of the arch far-right gentleman off of de Gaulle is appealing to the poor and the left. I don't know of an American equivalent to Le Pen, Lisa, stretching over from the immigrant and far-right tone to the left to ask for votes.
Actually, there's a pretty direct corollary where you see the sort of extremes on both sides come together with something where you want to tear down the norm. And that has been something that you see increasingly in a lot of political dynamics right now around the world. And you saw that in the U.S. certainly during Donald Trump's era. I wonder how much this inflationary print will exacerbate that, even with the backdrop of what's going on in Ukraine and the unity of NATO. And this is one of the tensions that I'm watching politically.
One of the quick numbers to show you the difference, France with a 4.5, maybe heading to 5% inflation versus what we will see in 20 minutes in America. On economics, finance, investment, on international relations and the politics of the moment. Please stay with us on Bloomberg Radio and Bloomberg Television. The inflation report in 17 minutes.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. President Biden will allow expanded sales of higher ethanol gasoline in an attempt to lower fuel prices. He'll make the announcement today during a visit to an ethanol mill in Iowa. Ethanol is commonly made from corn. The White House estimates that using the higher ethanol gas could save drivers 10 cents a gallon. Ukraine expects Russia to widen its offensive in the eastern part of the country this week. That echoes a U.S. warning, which also predicted a, quote, more protracted and a very bloody phase of the war. In the city of Mariupol, the mayor says that more than 10,000 civilians have died since the invasion. In Shanghai, the U.S. has ordered all non-emergency staff at its consulate to leave China. That led to a rebuke from Beijing, which called the move a political smear on China's virus policy. Most of Shanghai's residents were restricted to their homes for at least 2 weeks. Still, some restrictions have been eased, and residents report great access to supplies. Sri Lanka is taking an extraordinary step to save its dwindling pile of dollars for essential food and fuel imports. The government is suspending payments on some foreign debt and warned creditors of a possible default. There have been widespread protests in Sri Lanka against 20% inflation and daily electricity outages. And shares of CarMax are falling. The seller of used cars and light trucks reported fourth quarter earnings that missed estimates. Average selling prices soared by 40% to more than $29,000, but unit sales declined. CarMax blamed that on inflation at the end of stimulus programs and dwindling consumer confidence. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Season is coming.
The bar is pretty high.
We're going to see lower earnings growth.
The sentiment on financials has been pretty dour.
Bloomberg breaks the numbers first.
Tesla's gaining on record deliveries for the first quarter.
The industrial sector is getting hit pretty hard.
Every tick down is a big deal.
With exclusive expert analysis.
There are a couple of things that concern us.
We have to break out a different playbook.
There are opportunities out there.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
We do not have a policy rule for every segment of the population. We don't have one for every industry. We have one. It's called the interest rate, the Fed funds rate. That's really it. So it's a very brute force kind of hammer that we use on the economy. And of course, when you kind of have to use a brute force tool, sometimes there's some collateral damage that happens.
An important voice at the Federal Reserve, Christopher Waller. He's a research ex out of St. Louis with some real abilities. I will be clear when he speaks. Experts lean forward and listen carefully. They're on the hammer of the moment. Ira Jersey is one of those experts that leads forward, chief U.S. interest rate strategist at Bloomberg Intelligence. Ira, we tried to get you yesterday. I know you were on the phone trying to pull down the Amazon of 2062 for 4.1%. Where is credit going, given the full faith in credit move we're seeing? Is credit finally going to see some real damage, given what government bonds are doing?
Well, I think that investment grade credit will, continue to underperform maybe a little bit, but it really depends on the segment. When we have tightening of monetary policy, what tends to happen is you see more bifurcation within credit, where credits that are highly levered or more levered and continue to lever up when interest rates are going up tend to do worse than credits that are trying to pay down debt and have good cash flow and are using cash flow to buy back debt or not issue as much. So I think it's really more of a credit pickers market as opposed to just buy everything in sight or sell everything in sight. I think that buy everything in sight is far behind us. So pick your spots here if you're going to be dipping into the corporate market. Yeah.
And the corporate credit market is being so driven essentially by the rates market, which, as we have this drumbeat to the CPI print that we're going to get in about 10 minutes, really is front and center. What is the reaction in the rates market if the inflation rate that we're about to get actually surprises to the downside?
Yeah, and I think there is an interesting risk of that, Lisa, because you see some components, things like used cars have really come off quite a lot. Plus, oil prices obviously have been fluctuating a little bit too, and those could wind up, you could wind up seeing a little bit of a downside print. I think if that happens, we probably don't see much of a move in 2-year yields. I think the 5-year sector, though, could wind up rallying 5, 10, 15 basis points because that is very sensitive to how high and the Fed will ultimately hike. But the front end is, the Fed's hiking, and it's really a question of to what level do they hike? Do they hike to 3.5, or do they hike to 2.75?
To be quick here, because I know Kaylee wants to get in. Ira, is the 5-year a short-term indicator?
So the 5-year, we use the 5-year in many ways as an indication of the terminal rate. So basically the interest rate that the Fed will ultimately hike to. So if that is lower than the market's currently pricing of around 3% plus or minus 5 basis points, you can wind up seeing the 5-year maybe rally back, because we're already pricing, Tom. Interestingly, we're already pricing for the Fed to cut in late 2023 and early 2024. So we do think that the peak in interest rates, at least the market's pricing for the peak in interest rates to be in about 15 months from now, and then the Fed have to take some of those hikes back.
Ira, obviously we saw yields breaking the 280 level on the 10-year earlier today. We have since come in. Real yields also heading more negative, down about negative 18 basis points. What would the reaction be in real yields to a downside surprise on inflation, which could still have an 8% handle, even if it comes in a little bit below expectations?
Yeah, I think real yields have had this massive move, Kaylee. Real yields have come up 100 basis points in basically a month, and so it wouldn't be a big surprise where if you had a little bit of a downside surprise that real yields rally to maybe negative 25 basis points. But one of the real yields are very, very sensitive to policy action. So as the Federal Reserve continues to hike and as they start to unwind their balance sheet, real yields will likely turn positive, particularly in that long end of the curve that you noted. I think they can turn positive in the next 6 weeks. I mean, basically, the Fed's going to hike in May, and as long as we're pricing for another couple of hikes in June and July, I think that 10-year real yields can be positive at that point.
What do you think the inflation rate's going to head toward, either later this year, Ira, or perhaps even later next year, at a time when that terminal rate really is the key variable at this point?
Yeah, so this will be the peak. I mean, just mathematically, when you look at year-over-year prints, this month it should be the peak. I think the question is the market correct in thinking that we're going to have 4-ish% year-on-year inflation at year-end or not? I think that personally, I think that the risk might be that we are a little bit below that. But if there's a lot of variables to that. But the big thing is, what do those oil prices do, and what do some of the goods prices that have gone up do? Because even though the goods prices year on year right now are very, very high, the chances of them repeating what they've done the last year is pretty low. So I do think that we will have inflation probably a little bit sub 4%, but that's still well above the Fed's target. So the Fed will still remain hawkish, at least for the first portion of 2023.
Ira Jersey, thank you so much. Greatly appreciate that brief. And of course, his writings for Bloomberg Intelligence must read here off of the 8:30 report. We now wander to Michael McKee. We believe he's with us right now. He had some technical difficulties there. And I want to go, Mike, to the core of the moment. All the focus is on the media number, 8.4%. I'm appalled by the core estimate of 6.6%, which gets us back to, I know, your favorite song, Eye of the Tiger, in the late summer of 1982. Wow.
Well, I mean, both numbers are going to, if we hit the forecast, we're going to get to 1982 for both the headline and the core. And you and I remember, and the ladies don't. So we're all.
I mean, core is core.
Well, that's what's telling you that this is broad-based. It's more than just food and energy. Americans notice food and energy when they go to the gas station or the grocery store, but we're seeing a lot of different categories contribute, and there's some expectations that even today we're going to see some of the transitory numbers, the reopening numbers like airfares and hotels and car rental prices go up. Well, housing has been going up on a regular basis, and that's going to keep going up. That's going to keep adding to inflation pressures.
The first time I heard Eye of the Tiger, I was like, you got to be kidding me. It played like every 15 minutes.
Are you going to sing it
know
for
where
us?
that
Is
comes
that what's
from.
going on?
It was the Rocky movie.
It was a Rocky
From a few
movies.
bars.
It was like, yeah, karaoke bars. Thank you. Michael McKee will...
Surveillance karaoke here.
Neither McKee or I will sing Eye of the Tiger here, but truly it is an historic moment. Lisa, I think, you nailed it. Kaylee nailed it as well. This is absolutely original for a huge body of Americans. We're going to get through this strong. Michael McKee will give us the data that we'll see in 4 minutes, and then we are honored to bring you Seth Carpenter. He is the chief global economist at Morgan Stanley. Futures up 8. This is Bloomberg on radio, on television.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
price that is down in America are Red Sox baseball tickets. They've started out 1 and 3. The ticket price has declined. Everything else is up, up, up with a report you have been waiting for. Our Michael McKee. Michael, do we get it right at 8:30?
We got it right now, yes, as a matter of fact, Tom, and we're getting almost exactly what economists forecast. On a month-over-month basis in March, the CPI went up 1.2%. That's what was forecast. It was up 0.8% the month before. And on a year-over-year basis, we're up 8.5%. So there's a rounding issue in there that people will look for. But the forecast was for 8.4%. It still leaves us in the same place. This is the highest inflation since January of 1982.
Mike.
Just let me do the core here, Lisa, and we can do that. 0.3%. That comes in lower. So there's some good news there. 6.5% on a year-over-year basis, a tick lower than anticipated, than the economist survey said. I'm sorry for interrupting you.
No, that's fine, Michael. You know, there's a lot of market on the move here. Green on the screen, and the S&P futures up 29. That is a genuine percentage move here, up 0.6%. NASDAQ up 1.2%. Yields come in with a vengeance from the 280 headline level of 18 hours ago in 9 basis points. 2.71%, even a fractional dollar weakness as well. Lisa.
But I just wanted to point out the yield move because to me this is fascinating. It came in above expectations, 8.5%, and yet people seem to be pricing in an even higher beat to inflation, and that is compelling to me. The fact that 10-year and 2-year yields both tanked really gives you a sense of where the zeitgeist has shifted and whether people are out hawking each other at a time of such high inflation.
Mike, I want to set up for Seth Carpenter, and I want to go to what we're going to hear from Lau Brainerd and others today, which is about the paycheck. You can bring the banners up there if you want, Qantas. The idea of what average hourly wages are doing. I've got near the pandemic high, 7.4% lift in the real wage. It's an odd number, and it doesn't matter, but it's supposed to be 3 or 4%. It's negative 3.6%. Americans are getting clobbered on wages by this inflation.
Yeah, it's a little complicated because this only takes into account wages. It doesn't take into account other ways of earning money. And so it doesn't take into account government transfer payments. So it's not as bad as it seems when you put it all together, but it does show that nobody's gaining on inflation at this point. A couple of things that people are going to be shocked to learn. Food, fuel, and housing are the main culprits behind
Thank you for that value
the
add
rise
this morning, Mike.
That's why they pay me the big bucks. Food at home, 1.5% higher in the month of March. That's, of course, the grocery store stuff. Gasoline up 18.3%. Nobody's going to be surprised with that. However, gasoline prices have come down in recent weeks, so look for a little bit less inflation in April. And then in terms of housing, we see the rent prices were up by 0.4%, and owner's equivalent rent also 0.4%. That's continuing a streak of 0.4 rises for the proxy for home prices. Airline fares. If you've been on vacation lately, Thomas, you know that they've been up. They are up 10.7%.
Unbelievable.
Everybody's flying. Big story I saw this morning on the Bloomberg about how the lines wrap around the airport for security these days.
Well, and Paul Donovan of UBS with that important comment on demand destruction. We'll tilt there now. Michael McKee will dive into this data with much better insight here in the 9 o'clock and 10 o'clock hours as well. We will summarize with Seth Carpenter. He's Chief Global Economist at Morgan Stanley. Seth, I want to go to WTO global markdown on GDP, but we must speak of what Ellen Zentner will parse of this inflation report. Is there any sight out there, Professor Carpenter, Dr. Carpenter, of demand destruction?
So demand destruction's a tricky phrase, right? It says that prices have gone up because there was so much demand that demand goes away, which presumably then brings prices back down. I do think there's clearly a hit to the consumer from the surge in oil prices. Tom mentioned just how much gasoline prices were up. You were both talking about where real wages are going. I think it's unquestionable that when some of the categories, energy, food, that especially the lower end of the income distribution can't just substitute away from, that's got to be a hit overall to consumption spending. What I think is more important with this report, though, is the fact that core underperformed, and we saw the rally in rates. I think if you look at used car prices, they were down sharply. Even the rent and owner's equivalent rent, which stayed solid, was actually off just a little bit. So instead of a continuing upward trend to those key drivers of inflation, we're actually seeing a little bit of a softening. So in our numbers, at least, and it's always hard to make a forecast, but in our numbers, we've got to the peak of inflation, and we're likely to start to see things come off, albeit gradually from here.
Seth, I got to say, the absolute number came in above expectations. The knee-jerk response is almost as though this is a downside surprise. What do you make of that?
I think it really is the difference between core and headline. I think everyone knew that oil prices had gone up and that was going to show through to this month's print. I think everyone knew that commodity prices for agriculture had gone up and that was going to show through to this month's print. And so for the durable underlying trend of inflation that's going to be with us, not just this year, but next year, that the Fed may have to respond to, again, not just this year, but next year, that I think is what the rates market is reacting to.
Seth, how much can you really project out from this one report? We've been talking about how it's not just necessarily the peak, but how quickly it comes down. On the margins, how much does your forecast change after today's number?
Well, on the bright side, our forecast doesn't have to change all that much. The core was a little bit softer, but for me, what's really important here is the pattern, that we are starting to see some of that softer reading in some of the goods. We are starting to see, for instance, those used car prices start to come down. I think in that sense, it's very much the pattern, the trend, as opposed to the specific number.
Does that pattern change anything for the Fed, Seth?
At the margin, it probably takes off just a little bit of the, the fire on the burner at this stage. But I don't think it changes things dramatically. There's no two ways about it. Inflation is high. Inflation is too high for the Fed's comfort level. All of the members of the Fed, even the historically dovish ones, have said exactly the same thing. So in that regard, I don't think this actually changes things much. In fact, one of the points I've been making to clients is 1 month CPI here or there is not going to be dispositive for the Fed. What's going to matter at least as much is how strong is the real economy? How much can they lean in to the strength of the economy to slow things down, to get inflation under control? That, I think, is going to be the key.
Well, and that comes down to the tolerance of consumers for higher prices, their propensity to continue spending even in the face of them. Seth, what is your expectation around the demand picture and whether or not destruction is going to start to take form in the face of the higher prices really across the board?
Yeah, so Ellen Zentner, our chief U.S. economist, and her team put out a bit of a forecast revision on Friday, and we took down the consumption path for the second quarter, largely because we did see this big spike in oil prices. Now, a lot of that rise in oil prices from the Russian invasion of Ukraine has reversed, not 100%, but a lot of it has come out. Nevertheless, what we see in the data as a regular pattern is when energy prices spike for supply reasons, we do see a pullback overall in spending in the next couple of months. And so we are expecting Q2 to be on the softer side for consumption.
Seth, I want you to talk about the social impact here. The integrand, folks, is the area above or below whatever the horizontal line is. It's one measurement of the tone of the x-axis. And the great financial crisis has an integrand of negative income, Seth, that is small now compared to what we're going through. The agony here for certain deciles of America has to be tangible.
No question about it. The past couple of years has been extraordinarily difficult for folks, and it has been extraordinarily more difficult for folks at the lower end of the income distribution. The only silver lining there is that we do see a differential in wage growth across the income distribution, and it has been highest at the lowest quintile.
Yes.
So in that sense, there's a bit of comfort. But I suspect for anyone who had lost their job during the pandemic, that's a bit of cold comfort.
But Seth, very quickly here, and I'm so sorry we don't have the time. I'm looking at a middle class flat on its back on an inflation basis.
Unquestionably. And in that regard, I think the retreat of oil prices, some of it on the news of the coordinated release from the Strategic Petroleum Reserve, that's got to help some, but it's not going to go anywhere near to the extent of making people feel good. The economy is growing extraordinarily rapidly. Jobs are being created extraordinarily rapidly. And yet I think the sentiment, as measured through various surveys, is that people are still feeling fairly hard done by. And that's a very challenging thing when the macro feeling doesn't match the micro feeling.
Dr. Carpenter, thank you so much. With Morgan Stanley, Seth Carpenter this morning. Ellen Zentner, no doubt, with reports out in the next hour. Lisa, Seth talks there about what you mentioned earlier, which is the confidence indicators are stark.
And how much does this continue to influence it? This report, though, actually, again, the core reading, as Mike was talking about, really is the key takeaway here, that core inflation came in lighter than people expected, which is the reason why you're seeing futures surging, which is the reason why you're seeing yields actually come in. And so it really shows how nuanced this kind of report is as people extrapolate out to later in this year and next. We're going to be speaking about this with Jerome Schneider of PIMCO coming up on the Open, about how you find safety in short-term debt at a time of such volatility, Tom.
Yeah, yields come in with a vengeance here from a 280 into 273 in the 10-year. Two-year yield shows 2.45% as well. And the 2-10 spread is still steeper, 28 basis points. I think the dynamics here between the nominal yield, the one we quote all the time, and inflation guesstimates that are out there, which leads you to the residual, the real yield. Yes, the real yield is a little more negative off this report, but maybe not as much as you would expect, a negative 0.19 there on the real yield. Dollar is weaker this morning. Equities with a lift. NASDAQ leads the way, 1.4% as well. Please stay with us. This is Bloomberg Surveillance. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The World Trade Organization has cut its global outlook, saying Russia's war with Ukraine will slow the world's rebound from the pandemic. The WTO lowered its projection for growth in merchandise trade this year from 4.7% to 3%. It's also cited a number of downside risks to its assessments, including food insecurity and a possible resurgence of COVID. Bloomberg's learned that India plans to boost exports to Russia by $2 billion in the wake of international sanctions. The two countries are said to be working out a payment system. Amongst the products India would ship to Russia are pharmaceuticals, plastics, and chemicals. President Biden has unveiled new federal rules restricting so-called ghost guns. It's a crackdown on purchasers who assemble potentially untraceable weapons from kits. The Biden administration has been criticized for a rise in gun violence during the coronavirus pandemic. A Citigroup analyst estimates that Apple may be about to announce a share buyback of as much as $90 billion. Jim Suva also says the iPhone maker may boost its dividend by up to 10%. Apple's second quarter results are due after the closing bell April 28th. The company has more than $200 billion in cash on its balance sheet. Demand for air travel in the U.S. is rising, but not as fast as the cost of a ticket. According to the Adobe Digital Economy Index, the number of actual bookings last month rose 12% compared to before the pandemic. Meanwhile, those ticket prices jumped 20%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Will be on China, because we are seeing that the numbers that will come out for March and April are really going to come down materially as they've increased the lockdowns. The lockdowns in China, they're affecting really the equivalent of more than a third of GDP right now.
Joyce Chang with some real good comments there from JP Morgan on their view forward, and again on the Pacific Rim and the lockdown. Thank you to Enda Curran for his reporting from Hong Kong earlier this morning. The yield market has moved. Lisa, we must touch on this before we get to Greg Valliere. Now a 10 basis point, 9 basis point move from the 280 level on the 10-year yield down to 271.
Absolutely, and I'm going to do
my
best Lisa impression here, Tom. But it's interesting. This market seems focused on one number and one number only, and that is only a 0.3% increase on the core month on month. Right. Forget about the headline year-on-year number coming in ahead of expectations. That slowest price growth since September is what the market seems fixated on.
We glance out to what presidents are doing today. We see Mr. Putin in the far east of Russia talking up space and the Nazism of Ukraine. We have seen Mr. Macron campaigning over in France and near Switzerland. Madame Le Pen down the Seine River towards the English Channel campaigning as well. And the President of the United States will wander to Iowa to save us 10 cents a gallon on ethanol. Greg Valliere provides perspective. He is Chief U.S. Policy Strategist, AGF Investments. Come on, Greg, you and I are the only ones alive that remember the 97-year-old Jimmy Carter. What was he doing in April of 1978 on his way to being a one-term presidency? The same as Joe Biden?
Largely, yes, Tom. I think that Biden needs to do something fast to rehabilitate his image in the polls. Number one, I think it's time for a staff shakeup. I don't know Ron Klain. He seems like a nice guy, but somebody's going to have to be the sacrificial lamb, and it could be Klain. Secondly, I think Biden needs to pick up the phone and call Joe Manchin and say, Joe, I'll do whatever you want. You got to give me drug price controls. You got to give me some pre-kindergarten stuff. You got to tax big companies. There's things that Manchin would agree to. And I think Biden needs to get something done to show the public, for example, that he could do something about drug prices.
If we get a Republican Senate or House, how does that change 1600 Pennsylvania Avenue?
Enormously. If even one of the houses goes, and let's face it, the House of Representatives is a very, very likely bet to flip, then I think the Biden agenda is pretty much finished. He can still do regulatory stuff. He could still affect the financial industry with, the SEC, things like that. He would still be involved in geopolitics, but in terms of an agenda on fiscal policy, it would be over.
Is it over for his climate agenda in particular, Greg, as he looks toward ethanol, as he taps the SPR, as he seems to be pivoting back to fossil fuels in the face of higher energy costs?
Good point, Kaylee. I think that the environmental movement is stunned. They are reeling. They're on the defensive. I think Biden has had to make sacrifices here, and I think Biden's need for fossil fuels goes against the orthodoxy of the environmental movement.
Well, let's talk about some of these contradictions, Greg, because on the one hand, you also have a U.S. populace that by and large supports taking further action to support Ukraine against Russia at the same in large supports taking further action to support Ukraine against Russia. At the same time, they're facing price pressures at home, which we just saw identified in an 8.5% CPI number. How does the administration balance those two forces, considering a lot of the action they could take against Russia is in and of itself inflationary?
Well, absolutely. It's an almost impossible situation for the Biden administration. I'd also add in that list of things urban crime, which to me is going to be a sleeper issue, one maybe among the biggest issues of all this fall. But when it comes to Ukraine, I think Biden is in a very tough spot. He's got to send more arms.
Right.
I do worry if there's weapons of mass destruction. I do worry how NATO would react.
What does he do on urban crime, Greg Valliere? What does Joe Manchin do to help the president fund the police, I guess is the clean way of saying it?
I think he has to look at bail. I think bail has become too liberalized. I think he has to urge governors like Gavin Newsom that they've got to get a lot tougher, and they're just looking the other way.
Greg, you sound like a Republican. Is that what Joe Biden needs to do to try to salvage this?
I'm just saying what Biden needs to do if he wants to win in November. And I think that the chances are very, very unlikely that he could pull it off. But a drop in inflation, a drop in crime, settling Ukraine would all make a big difference. But let me make this point, Tom. History would show that if these issues aren't resolved or looking better by summer, it's too late. You can't say, oh, in September, I'm going to make some changes. The public has already solidified its opinion by the middle of the summer.
And there's only a few months to go until then, Greg. That's all on the domestic front. What about abroad? For U.S. allies, has the U.S. refortified its position as a world leader during this Ukraine crisis?
Oh, I think we're going to have to send a lot more arms. I think that NATO is going to have to send a lot more. This is, after reading the interview in the New York Times or the piece on the Austrian chancellor who talked to Putin yesterday, you read that and you go, Putin is not going to be dissuaded. This is going to get worse before it gets better.
Greg Valliere, thank you so much for the brief. Timely to say the least there. We'll be watching the White House with Anne-Marie Horden. There are headlines out of the United Kingdom. Our English expert, Jonathan Farrow, is not here to help us with them. Kaylee, let's struggle through this as we can. The Chancellor of the Exchequer is to be fined over lockdown parties. I'm not sure if Farrow attended those. The United Kingdom Prime Minister will receive, quote, a fixed notice penalty. This from the BBC this morning.
Yeah, Tom, this is, of course, an issue that some of us had long forgotten, given the war in Ukraine, which actually in some ways was a political blessing to Boris Johnson, who could focus on foreign policy rather than some of these domestic issues. This is an investigation surrounding allegedly a dozen gatherings that happened at Downing Street in the Prime Minister's offices with his staff during what was a COVID lockdown in the UK. It's been an ongoing investigation, and we understand a total of more than 50 fines have been handed related to those parties in government buildings. But now the Chancellor, Rishi Sunak, who has had a rough couple of weeks, mind you, a lot of probing related to his wife as well, and Boris Johnson receiving fines, according to the BBC.
And what is so important here, folks, is, it's not that we're making jokes about it, but it's like, well, okay, here are the headlines and that. I would respectfully suggest, Kaylee, that John Farrow takes this really seriously. This is a huge deal in England that people, including the extended Farrow clan, were at home while they were partying. That's a tone I get out of this, Kaylee.
Yeah, in a lot of ways, this is an optics issue for Prime Minister Boris Johnson, that you can be carrying on when there were people really suffering in the heart of the pandemic. And of course, families affected really across the board. We know it's a personal issue for some, Tom, but maybe that's starting to come home to roost with these fines. You're starting to see the consequence for it.
We're going to move through move forward through the morning, I should say, after this inflation report. Significant market moves to 2 digits a handle. The 10-year yield 2.69% is stunning move. That is higher prices and lower yields this morning. Stock market likes it. Futures up 51. And the VIX comes in from the 24 level to 22.54. Please stay with us on radio and television. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
however you get your news.
This is Bloomberg Daybreak with Link.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
From New York City, for our viewers worldwide, I'm Lisa Abramowitz, in for Jonathan Farrow as we watch futures surge into the open. The Nasdaq flying nearly 2% after core inflation came in lighter than expected. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Begin with the big issue, markets focusing on one thing.
Inflation.
Inflation.
Inflation is a problem.
So far, it seems as if inflation is the be-all and end-all.
The CPI number today.
We're in a new inflation regime.
Certainly not an easy position for the Fed.
But to me, the messaging is clear.
They need to normalize as quickly as possible.
The Fed has to get inflation under control.
This is tricky.
The messaging has been incredibly hawkish.
We'll get 50 basis points in May.
We do worry that there is demand destruction in this policy.
Trying to re-anchor those inflation expectations.
They are inflation fighters in a way that we haven't seen in the past 30 years.
Joining us now, Pictet's Ella Hoja, JP Morgan's David Kelly, and PIMCO's Jerome Schneider. Ella, I want to start with you about the reaction that we're seeing right now in markets. You are seeing that pop in equities. You are seeing that decline in Treasury yields, even though if you strip out the fall in auto prices, this still looks like pretty pervasive inflation. Does this particular report change anything for you?
Well, the market's been looking for inflation to peak at some point, April to May of this year, and we probably on the core side are getting a signal of that occurring. So I would say probably for risky assets, it matches those expectations that were already starting to be reflected in the way equities have been trading and also in the way the curve's been trading more of late. So no particular surprises coming from the core component. The important message is, I guess, what you're highlighting, which is, your headline level is still high and it's still early days in the dynamic, and the levels are still pretty hefty. So, from a macro perspective, we don't have full visibility as to, how much of a decline we might get, should we get a decline to begin with.
Jerome, what was your reaction to this report?
We're getting to the precipice of core CPI, really getting to that high point. It probably marks, at this point, the year-over-year peak at this point. The reality is that there is a longer road, as we note here. And so while we are slightly optimistic on this figure, that it gets us past the key point, we still have a little bit of headwinds ahead of us. Clearly, the wedge between core and headline is something to be contend with. There's also the real impact to the consumer, which we've debated here over the past few weeks. And ultimately, what we're seeing is a sigh of relief, specifically in the front-end markets, with front-end rates rallying here over the course of the past 30, 35 minutes or so, really giving us a sense of relief that the Fed, while still has to be active, while still has to be aggressive in the near-term sense, probably may get a sigh of relief if we actually don't get the core prints as high over the course of the remainder of the year, which is what we believe here at PIMCO.
David Kelly, was there anything that gives you relief about today's report if you take a look at the specific aspects of the underlying data?
Well, yeah, I mean, I was interested. I mean, just small little things like food in restaurants didn't go up that much. Some of the, the fact that the core CPI only went up by 0.3%. I do think, the problem is there is a certain amount of sticky inflation that's going to survive even after energy prices break, even after some of these supply chain issues clear up. And you can see that in the 4.5% year-over-year gain in owners equivalent rent. So we're going to have some sticky inflation for a while. But this is not, in the long run, this is not going to be an 8.5% inflation economy. It's going to be much closer to 3 or 4%. And the question is, what are we willing to do to push inflation lower than that in the short run?
All right, well, we've been talking this morning about the inflation read. Let's give you some of the data. We saw an 8.5% headline level, which is the fastest pace going back to 1981. And right now we are looking toward a Fed. How much do they have to do? Bloomberg's Michael McKee has been tracking it all. Mike, how much pressure does this really amp up on them?
Well, the headline number certainly puts pressure on the Fed. After all, this is the highest inflation since 1982, when Paul Volcker was the chairman of the Federal Reserve, and he had only been there for about 2 years and was bringing inflation down, but then it spiked again. We don't want that to happen. The good news comes in the core, where the core doesn't rise as much as anticipated, and at this point, the argument about whether you're looking at the goods or services prices that we've been tracking begins to sort of flow towards the Fed. Goods prices actually declined on the month of 0.4, and on a year-over-year basis, they're up 11.7%. That's down. Service prices are rising, and they were up 0.7. They're up 4.7%, and that is what was anticipated by the Fed, that as people spent more on services, they'd spend less on goods, and that would take off some of the inflationary pressure. They did not count on a war in Ukraine, and gasoline prices up 18.3%. No surprise to anybody who fills up their tank. 48% on the year, and food prices are still rising, and as we just mentioned, rent prices still rising, 0.4 higher, and that pushes the year-over-year level to 4.4%. That's going to be sticky for a while. Used cars, by the way, down 3.8% on the year. That is a major contributor to the goods price decline, and it shows that maybe a little bit of the transitory argument still works. Now, here's the good news going forward, to the extent that we have it for a while, is the 4 months that we're in now were the 4 highest months of inflation following the pandemic. And so as we go through these months, we're going to see a smaller contribution to inflation from whatever we get on a year-over-year basis, and that should bring inflation down some. And the blue line there, that's gasoline prices. Remember I said gasoline prices were up 18.3%? They could actually decline in the month of April, and that would really push down on the overall CPI and make things look a little bit better. It doesn't mean we're going down to 2% anytime soon. As David Kelly said, we're going to be sticking in the 3 to 4% range, but this does give the Federal Reserve some hope that they can get there.
Michael McKee, thank you so much. And heading back to the panel, I'm just parsing through some of the components that Michael McKee was talking about, including the fact that, as Fitch says, that almost the entire decline in core pricing came from the decline in auto prices. And I'm wondering, Jerome, you said that you do think this takes some pressure off the Fed. Why, if all of this has to do with year-over-year comps with autos?
Yeah, let me be clear. It takes a near-term pressure off the markets, which were probably pricing a very aggressive Fed at the outset. That Fed is still going to be aggressive because the markets have left it an open door to be aggressive with a 50 basis point hike at least 1 or 2 times in the near future. I think what's more important, what the Fed is really going to focus on, is not the month-over-month data in terms of used car prices and things like that, although they're important, and clearly food prices and commodity prices are important. But what they're going to do is look at that longer-term inflation metrics. They're going to look at the five-year break-even, see if they get closer to 3% as opposed to 2.5%. They're going to look at this Thursday's University of Michigan indicator number to see if those longer-term inflation expectations start to seep into those into the mechanisms of the economy that they actually have to address. It's the longer-term psychology for consumers, for the markets, which is going to have to be that the Fed eventually addresses to. So while this month-over-month and the year-over-year core CPI probably marks that, given baseline effects, probably marks the peak, they're going to still be focused on that longer-term trend.
David, what's your sense of where we're going to head down, where we're going to trend in terms of how high the Fed is going to have to raise the terminal rate? Where are you thinking at a time when we were speaking yesterday with Bernstein's Bernstein advisors, and how, frankly, it could be 3.5 to 4%?
Well, I think it'll be a little bit lower than that. At least I think that's where the Fed's going to end up. The real trick here is to avoid putting the economy in a recession as you battle inflation, because what you're trying to do is get rates back to normal levels. Now, if you go way back before the financial crisis, in the 50 years before the financial crisis, the real federal funds rate averaged 2% positive. So if the end of all of this we're at 2% inflation or 2.5% inflation, add 2 to that, and that's what the Fed ought to be trying to get to. But I think it's going to take a while to get there. And, what I do worry about is the economy is going to be a lot softer by the end of this year. I don't want the Fed pushing up rates very aggressively right now, weakening the economy into 2023, then suddenly staring into the face of a recession and having to stop doing what it's doing because it needs to get back to a normal monetary policy. So I don't think that I think that they'll chicken out basically before we go into 2023. So we might get a sort of a terminal rate in this cycle of 3% of the federal funds rate. I'd be surprised if we actually end up being higher than that.
And this actually goes to a point that Deutsche Bank was making where they were saying that the Fed's policy path has major implications for the economy. David, as you were flicking at, writing, quote, we see the Fed funds rate reaching 2.6% by year end and achieving a 3% peak around mid-2023. In our view, such aggressive tightening of monetary policy will push the economy into a mild recession, likely beginning around Q4 of next year. Ella, does this seem plausible or likely to you?
We have to say that we're really playing here with probabilities, in terms of the scenarios and also what's priced in the market. So as I was saying earlier, very difficult to have clear visibility for a variety of factors that were highlighted. If you wanted to be really controversial, you could use the shadow rate argument and suggest, which for some would suggest that we've already tightened by around 2.5%, as far as the Fed is concerned. And, so on a more controversial basis, some would argue that 1% is probably the terminal, as far as the Fed can go to this time. Why? Because in all their sort of more recent tightening cycles, each time we have peaked at a lower level. Now, of course, there are lots of mixes in this backdrop that we're trading in that suggests perhaps this time could be different. Perhaps this is a Volcker period. Perhaps this is 1994. But it's very, very difficult to say with a lot of certainty. So to us, the risks that the Fed can over-tighten and cause harm to the economy are high, and that's what the curve and the bond market's sort of telling you. But on the other hand, risky assets are suggesting that perhaps we can absorb this level of tightening and perhaps, inflation will indeed start to reverse much lower. So, very, very difficult to say with a lot of certainty. So to us, the composition of those two or the mix of those two says that we want to run lower risk at the portfolio level so that we can actually benefit from those dislocations that we think are likely to occur in markets.
Thank you so much, Ella Hoja, David Kelly, and Jerome Schneider. You're all sticking with us as we parse through some of the themes that you guys have all brought up. Joining us now with a look at the stocks moving ahead of the opening bell, here's Abigail Doolittle.
Lisa, we have stock futures sharply higher. In fact, heading to the best day in about 2 weeks. Before looking at what's working, let's take a look at what is weighing. First of all, the shares of CarMax are down. This on their earnings report that was disappointing, a big earnings miss by more than 20%, despite the fact that used car prices were up 40% year over year. Weighing on same-store sales, down 6.5%. That stock down 4.5%. Hewlett-Packard Enterprise is also lower, down 2.5%. This as HPE is part of a 3-stock downgrade at Morgan Stanley, also downgrading F5 and NTAP. The analysts there are cautious on telecom and network equipment stocks, saying that the strong dollar may slow international enterprise sales. As for what's working, energy is higher. ConocoPhillips up 1.6%, in line with oil, up about 4.5% at this point. A little bit of rebound there. And then, of course, the big trade after the CPI came out, Apple up 1.5%. Now, Citi is also talking about the fact that they may raise their buyback and dividend, but with yields in a little bit, that is helping out technology. Apple up about 1.5%, Lisa.
Abigail, thank you so much. Coming up, we'll shift focus overseas. U.S. officials warning of Russia's renewed focus on the Donbass region.
It would be a mix of personnel carrying vehicles as well as armored vehicles and maybe some artillery. This does seem to be an early effort by them to reinforce their efforts in the Donbass.
That conversation coming up next as we take you to the open amid a surge after core inflation came in lighter than expected. From New York, this is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Earnings season is coming.
The bar is pretty high.
We're going to see lower earnings growth.
The sentiment on financials has been pretty dour.
Bloomberg breaks the numbers first.
Tesla's gaining on record deliveries for the first quarter.
The industrial sector is getting hit pretty hard.
Every tick down is a big deal.
With exclusive expert analysis.
There are a couple of things that concern us.
We have to break out a different playbook.
There are opportunities out there.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
The Russians are, in fact, trying to resupply and reinforce their efforts in the Donbass. We can certainly say by what we've seen in the past that we're probably turning another page in the same book of Russian brutality.
A delicate moment in Ukraine as Western allies shift their focus to the Donbass region. Russia's Vladimir Putin, saying he is confident his operation targets will be met. The Austrian chancellor offering little comfort after his meeting with Putin, saying, quote, "I have no optimistic impression that I can bring you from this conversation with President Putin. The offensive is obviously being massively prepared." This was echoed by some of the comments earlier this morning by Vladimir Putin when he was visiting Belarus. Bloomberg's Anne-Marie Hordern joins us now from Washington. We do seem to be digging in our heels, Anne-Marie, for a protracted conflict. What will start to move the needle? What are Western allies starting to prepare for as they try to bring this to a close much sooner than it seems like Vladimir Putin would like?
Well, Putin says that he is going to maintain this, quote, special military operation, thinks that he can have those goals. And the U.S. said this now will mean a protracted, even potentially bloodier war in the Donbass, eastern Ukraine region. That was also echoed as well, Lisa, from Ukrainian officials. So following all of this news about what we are expecting to happen in eastern Ukraine, you have President Volodymyr Zelensky talking to Lithuanian parliament, one, thanking the Lithuanian people for taking the step of blocking Russian fossil fuels, but also saying if Europe is aware that this is what is going to come next, why are they not moving? And really putting the pressure on European allies to ban Russian oil and then prepare for their next tranche to ban Russian natural gas. So that's part of it in terms of sanctions. The other part is, of course, that we are seeing a lot of more public outcries as well as physically deliveries of weapons to Ukraine as Ukraine prepares for what is going to be a very bloody battle, they believe, in eastern Ukraine.
Anne-Marie, just quickly here, you have an expertise in the oil markets and frankly have been tracking everything that's going on with the gas markets as well in Europe. How realistic is it for the sanctions to get expanded over in Germany, for example, to the oil and gas sector?
It's going to be incredibly difficult. You might have countries unilaterally coming out and saying we're prepared and we are going to block Russian, say, oil first, natural gas in a year or so or a few months down the line. But you have to get 27 countries on board. And you say Germany. Germany is a big one because most of their fossil fuels, very cheap fossil fuels, come from Russia, and they just don't have the infrastructure prepared yet. Yes, they are building 2 new LNG terminals to take in liquefied natural gas, say from Nigeria or Qatar or the United States, but that's going to take at least a year to build. You cannot do that in days. Then, Lisa, you have the likes of Hungary, who says they will never ban natural gas or oil, and that they're even willing to pay Putin with it in rubles.
Right.
So you could see how difficult it's going to be to get every single nation to sign that next sanctions package if they're going to go after it.
Indeed. Bloomberg's Anne-Marie Herdern, wonderful work as always. We've been looking at the OPEC report, parsing through it since it came out moments ago. Their monthly report really looking at the decline in expected volume from Russia. OPEC Secretary General Mohammed Barkindo saying, quote, "These crises have compounded to create a highly volatile market. These are non-fundamental factors that are totally out of our control at OPEC. It would be nearly impossible to replace a loss in volumes of this magnitude." Still with us, Ella Hoja, David Kelly, and Jerome Schneider. David, I want to start with you. There is a sense that we were supposed to get a rolling over in some of the base comparisons. Yes, we have seen a dip in gas prices of late. How long can that persist? Are we going to see even higher oil prices from here as this conflict goes on?
Well, it depends on whether it settles into this, a horrible but protracted fight in eastern Ukraine. Your last report, I think, was essentially correct that the Europeans aren't in a position to cut off natural gas and oil. And if you think about it, the longer this goes on, the easier it's going to be for Russia to divert its exports to other buyers. And so the oil market ought to come to balance. Also, at these prices, that will be spurring a lot of investment in U.S. LNG production and U.S. oil production. So I think the trend from here is probably down for oil, and you can see that in the futures market. I mean, if you look at oil futures markets out to the end of this year, into next year, you're talking about prices in the 80s. So prices should gradually come down. I can't promise that month to month, but they should gradually come down, because at these levels, everybody's making money in the oil market. So I think energy prices will gradually come down, but obviously, none of this can happen soon enough for the people of Ukraine. They really do need to inflict some real pressure on Putin to try and get to stop this.
Ella, just quickly here, how much are you doubling down on the commodity story in terms of being long some of the producers versus backing away, saying it's been already the peak of what's been priced in?
We would probably say that if it weren't for the conflict in Ukraine, then clearly we would say the commodity story was more of a 2021 story. Now, of course, with the geopolitical uncertainty, still impending, it's harder to say for sure. But I would agree with the previous speaker and say probably things look likely to come down from here in terms of oil prices, at least. So with that in mind, actually, if anything, we've been stepping away from some of the commodity producers, not necessarily taking underweights here, but certainly taking those positions off. And that applies to currency space as well, which is, with a few exceptions, predominantly speaking, commodities we think have played out here.
Ella Hoja, David Kelly, and Jerome Schneider, you're all sticking with us. I just want to bring you this, that right now a headline just crossing that Vladimir Putin says that talks with Ukraine are at a dead end, not exactly encouraging. Coming up, the morning calls and later the latest inflation print sending Treasury yields lower and big tech rebounding following its worst day in more than a month. More on that conversation still ahead as we still hold on to 1.5% gains heading into the open on the NASDAQ. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Taking a look at markets, you are seeing equities give up some of the gains. The NASDAQ up about 1.5% now. From the bond world, you're seeing yields on 10-year space going back down to 1.71% after having been as high as 1.82% earlier this morning. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street that we're watching. First up, Citi downgrading Cisco to sell. The analysts seeing a challenging environment amid difficult comparisons and increasing competition. Next up, Morgan Stanley downgrading HP Enterprise to underweight. The analyst highlighting the company's European exposure and weakening reseller commentary. And finally, Goldman Sachs upgrading CrowdStrike to buy. The analyst pointing to an attractive valuation with the company well positioned to capture elevated demand. Coming up, inflation and earnings taking center stage. That conversation plus the opening bell up next. And we talk about what we're seeing, particularly in the tech sector, with a lot of people thinking perhaps we're going to see a rotation. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets, the open, just seconds away from the opening bell. We are seeing the Nasdaq give up some of the gains that we saw from earlier, up now 1.4% after being up as much as 1.8%. Russell 2000 up 1%. The S&P lagging behind. What you're seeing in the yield space is basically yields going down and price going up as you talk about core inflation not rising as much as people had expected. The dollar also maintaining its strength. The euro down 108.77, and crude rebounding after yesterday's decline, up 5% to $99 traded on the NYMEX. A lot of this has to do with that CPI report. I do want to just bring to you, we are getting some developing news coming out of a Brooklyn subway station where we're hearing reports of either some sort of explosion or a series of explosions or some sort of shooting. There are multiple people being injured. The FDNY says that there are several undetonated devices at the Brooklyn location. We will bring more to you as we get it. The details are fuzzy right now. Joining us now with a look at the stocks moving at the opening bell, here's Abigail Doolittle. Abigail.
Well, Lisa, there's finally some relief for the tech trade, which has been under tremendous pressure recently with rising rates. Now that rates are lower on that CPI print, tech is bouncing back. Chips, in addition, had been especially under pressure, down more than 15% recently. Today, we have NVIDIA, one of the big chip names, up sharply off of its pre-market highs, but nonetheless up 1.7%. Microsoft also getting a bid, up about 1%. Tesla, a little bit of consumer and technology, up 2.2%. And then finally rounding it out, not technology, but retail, Kohl's up 5.5%. This as Franchise Group has joined the bidding with a $9 billion offer, $69 per share, less than Hudson Bay, but investors are taking it seriously. Kohl's at $60 per share, Lisa.
Abigail, just quickly here, how much are you surprised, are you hearing surprise from analysts about the pop in big tech, as so many people yesterday were talking about a rotation out, and you've seen the NASDAQ underperform the S&P by twice, down 14% versus a 7% decline in the S&P?
Well, you know, Lisa, it's interesting because tech has been under so much pressure, and I think some expectation there is that you would continue to see yields go higher. And of course, there's been so much about the downtrend in yields over the last 40 years, marking the great bond bull market. But with yields coming in just a little bit today, it suggests that that bull market is still in play, perhaps meaning that you'll see yields coming in, which could give more relief to technology as valuation is under less pressure. Perhaps. We'll see. This changes day by day, it seems. But right now, it seems as though we may be looking at some sort of a whipsaw to the upside.
Abigail, thank you so much. Going back to that story that we were just talking about, the NYPD now confirming that multiple people were shot inside a Sunset Park, Brooklyn subway station this morning. Bloomberg's New York Bureau Chief Shelley Banjo joining us now. Shelley, what do we know?
Not a lot at the moment. So this just happened. The fire department and the NYPD is advising people to get out of the area and move away. They've confirmed that shots were fired in the FDNY. The fire department of New York has said that they have also seen smoke coming out of this subway station. So the issue is they're trying to figure out, is this some sort of detonation of something, or is this shooting, gun shootings of people? So that's what they're trying to figure out now.
Shelley, before we let you go and get some more details, how much are we seeing this as part of a pattern, particularly as crime increases? This has been a massive issue for the city, albeit still way below where we were back in the 90s. How much is this sort of edifying some of the concerns?
Well, crime in general is down at decades lows. Violent crime is actually up, and it's something that started during the pandemic and has continued over the last 2 years and through the inauguration of the new mayor, Mayor Adams, who kind of rose and came to office on this promise of fighting crime. And so this is continuing to be a front and center issue for people in this city, both on transit, violent crime, shootings in the street, daytime shootings, hate crimes, things that are really visible. So while other kinds of crimes may be lower, things that are very high profile, visible, throwing someone in front of a train, shooting someone in broad daylight, those are the types of things that while the numbers may be lower, they get a lot of attention, they get a lot of headlines, and they make people scared.
Yeah, I can imagine. Shelley Banjo, we'll let you go get more details on this developing story. Thank you so much for being with us. And I do want to say for anyone who's commuting that there is no DN or R service in Brooklyn and some stations in Manhattan. This according to the MTA right now. So some major subway lines have been stopped as emergency staff deal with what's going on at the Sunset Park Brooklyn subway station. We do want to turn back to markets where it really has been driven by inflation, which frankly is underpinning a lot of stories that really do dovetail into some of the concerns that people have, especially globally when you see social unrest in many countries. Dan Suzuki is talking about how this is going to affect the tech sectors, warning that there is a tech bubble ready to burst. Take a listen.
Tech broadly, we think is still in the midst of a bubble. And I think that bubble, still has a lot further to go before it ceases to be a bubble. You think about the backdrop. This is not the right backdrop to be owning these types of stocks. Typically, when the bubbles collapse, they overshoot. What's a typical bubble down? It's not down the traditional 20, 30%. It's usually a lot more than that.
Still with us patiently through all of the breaking news, Ella Hoja, David Kelly, and Jerome Schneider. Thank you for being with us and your patience. Jerome, I want to start with you. Do you think that people have priced in throughout markets, and I know your specialty is in the short-term space, how high overnight rates may have to go in order to really curtail some of the inflationary pressure?
They really have forecasted a pretty aggressive Fed, and we've seen this as an evolving metric over the course of the past 6 months, where basically sell-side analysts, the markets, keep one-upping each other in terms of how aggressive the Fed actually has to be in nominal policy measures to actually tighten policy. They're probably going to continue until they actually see financial conditions markedly tighten, which we haven't yet necessarily seen yet. But the other side of the coin is what we've also talked about over the past week, which is bringing the balance sheet from the shadows into the spotlight. And this is an important metric because ultimately part of the debate is going to be not necessarily how high and how often the Fed has to increase rates, but to what extent does balance sheet and reducing the balance sheet help to create relief so that they don't actually have to be so aggressive on the balance sheet. There's going to be probably a debate in terms of how damaging higher rates eventually become to segments of the economy, to segments of the middle and lower classes. And that's probably going to be a debate for later this year and early into 2023. It doesn't necessarily paint rate cuts, but it does perhaps slow or perhaps create a bit of a debate and contemplation within Eccles building when FOMC meetings come around. So the notion of where we sit here today in terms of front-end rates, specifically where we started earlier today at about 2.5 or 2.55% two-year note, although we've rallied, it still marks a pretty aggressive tenor in terms of where we're headed in terms of rates. And more importantly, and I think this is an interesting fact, is that when you extrapolate where the two-year rate is, it's really suggesting that the one-year rate in 1 year is above 3.2%. And that's a fairly aggressive number that is actually fairly attractive to invest in from a carry and yield and income perspective. And that probably resonates with investors looking for a little more safety at the front end of the yield curve right now.
David, given the sense that we have been so aggressive in pricing in what we might see from the Federal Reserve, do you think that big tech is a buy or a sell?
Well, I think we're going to need to look very carefully at valuations. There are cheap parts of tech and there are expensive parts of tech. And I think what we're going to go through here is a period, first of all, of obviously high inflation, rising interest rates this year, and then slowing growth next year and slowing nominal GDP growth. And so I think there are going to be a lot of tests for a lot of assets here. So it's really a matter of valuation, stock by stock, security by security. There are some things that make sense and there's some things that make no sense. And I think everybody knows that. But I think that we're out of the days where you had very low rates, very strong growth, and you get away with anything. I think valuations will be much more called into question in the next 2 years because we're going to have a bumpier macro environment here.
All right, well, we've got more. Abigail Doolittle is back with us to look at some of the broader consensus views. Abby, what are you looking at?
Yes, indeed. Well, the Bank of America April Fund Manager Survey, key takeaways, lots of key takeaways to come from that monthly survey. So let's take a look at what they are. And one of the biggest, of course, is around the Fed and how many hikes are expected. The seven Fed hikes in 2022, that's consensus right now. One more around sentiment, global growth optimism at an all-time low. That's pretty ominous. Not surprisingly, then the biggest tail risk, global recession, the possibility of it. And then stagflation expectations, that stagflation word rearing its ugly head, the highest since August of 2008. So when we take this to the most crowded trades, not surprisingly, one of the biggest ones is short U.S. Treasuries, with the 10-year yield backing up 1.25 point this year in an extraordinary way. 10-year notes at 1 point down, the most on a yearly basis since 1999. But you also have the long oil commodities trade with oil at 1 point soaring. Long tech is pretty interesting, Lisa, only because we have, of course, seen some more caution there. Long ESG, short China on the various issues related to China. One of the more recent ones beyond the regulation of technology being the lockdowns that are occurring in that country again against COVID-19. And then long Bitcoin. And then finally, in terms of the tail risk, well, we did mention one already. That, of course, is the risk of global recession. The other one, though, hawkish central banks. The idea that you could see central banks, the Fed in particular, become a little bit hawkish, which would, of course, send yields rising. Tied into inflation, then, of course, global political problems, asset bubbles, COVID-19. Many, many issues, Lisa, as you can see, for investors to worry about this year.
Yeah, and frankly, the range of uncertainty, wide, wide, wide. Abigail, thank you so much. We've been talking about how this plays out in big tech. And Ella, I'd love your view, just weighing in on whether we perhaps are seeing some ideas of safety being represented in the tech sector, or whether this is the key area of risk with the rate and the rate uncertainty, I should add, not just necessarily rate hikes.
Well, so far, tech has had a very positive correlation with interest rates, so yields. And it sounds like from the Bank of America fund manager survey that everybody seems to be bearish treasuries, and therefore that probably doesn't bode so well for the tech sector. Look, we've had quite a bit of repricing there, and I heard that it's very specific to certain names and the growth stories there. But it's really about the broad macro environment. That's really factor one that's driving a lot of this prices. And difficult to sort of take the other side to the Fed. But I think the arguments made earlier in terms of the value in the front end of the curve, that to us is attractive here, given the carry-on role and given how much more hawkish the Fed would need to become from here for you to lose money. So I bring the bonds here because that they are very important for this tech discussion. So on the credit side for tech, there is some value and premium that's been built in. So we like owning that in dollar-denominated names. Very different story on the equity side. I don't think I'm very well equipped to talk about that. But broadly speaking, is really what's your point on how far yields can go from here. And we obviously have repriced a lot. Another thing to say on yields is typically when curves are so flat, going forward, things tend to look much better from a return perspective from bonds. Secondly, allocations to fixed income now are certainly on the lower side seen ever since before the global financial crisis. And another important element on the asset allocation story is that pension funds now, in terms of funding rates, they're looking pretty good. It hasn't been as good since the year 2000. So you might get some of that allocation come to the fixed income side. And so on the tech story, perhaps that gives bonds some stability, and therefore tech can have a bit of a breather on the back of that.
Ella Hoja, David Kelly, and Jerome Schneider, thank you so much for being with us. We are looking at equities that are losing some steam as time goes on, but we really do want to go back to what we're seeing in Brooklyn at that Sunset Park station. Currently, the subway department, the MTA, is saying that there is no B, N, D, or R service in Brooklyn. We are seeing a live shot. We have, of course, Governor Hochul being briefed on this developing situation. Evidently, multiple people were injured. They are not sure whether this was also a shooting. The perpetrator, the suspected perpetrator, is still at large. The FDNY did say there are several undetonated devices that they are working on. We will bring you any anything further that we get as we try to determine what happened and what the fallout will be. From New York, this is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Bloomberg Markets at the Open. Just want to bring you some breaking news. We're looking at live shots after multiple people were shot inside a Sunset Park, Brooklyn subway station this morning. We are hearing about undetonated devices found also in that station. The FDNY reporting that, and the MTA saying that no DN or R service currently is operating in Brooklyn. Right now, we have Bloomberg's Patricia Hurtado with some more details. Can you just describe to us, Patricia, the scene in Brooklyn right now?
Well, this area is a major transit hub for people going north and south in Brooklyn. It goes through most of Chinatown in New York City and through Manhattan and all the way into Brooklyn. There apparently is a chaotic situation. There were people evacuated from the subway station with smoke condition, as well as reports of people being shot. The latest reports are that 13 people were injured and 5 people were shot. And it's possible potential undetonated bombs also located in the subway station.
So do we have a sense, Patricia, of who might be behind this, how widespread this is, or what the prognosis is of the individuals that were wounded?
Unclear on the situation of the people and how injured they are. There was chaos this morning with helicopters swooping overhead. Apparently, there was an indication of a preliminary information of a suspect who was wearing a construction vest and a gas mask. And people were evacuated out, and all transit and subway service has been suspended in that area.
Do we have a sense, Patricia, of how rare this is? Because there have been a lot of reports recently about increasing crime, and we were just hearing from Shelley Banjo about how if you look on a sort of historic level, it still is down significantly relative to the recent past. What about in subways? What type of security is there? What type of situation is it?
Well, there has been a situation in the past. The subway system in New York is particularly vulnerable to being targeted by terrorist threats. There was an incident at the Penn State, at the Port Authority bus terminal, but connected to the New York City subway station in 2017, where a guy who was inspired by ISIS set off a bomb. And he was sentenced to life in prison. And he constructed a pipe bomb and detonated in the transit hub, which was, people were injured and, the threat of loss to life. So, he had zip ties. He wanted to take hostages. There was also another incident a very long time ago in which they wanted to bomb the Atlantic Terminal subway station, which is a major artery hub. And that was only thwarted at the last minute because one of the co-conspirators gave his fellow colleagues up. So it's always dangerous situation.
Yeah, and this is a developing situation, and we will keep monitoring it. Patricia Hurtado, thank you so much for being with us. And right now, just to give you a sense of what we're seeing in markets as we monitor this breaking news situation in New York City that has been recovering from the pandemic. I think everyone is a little bit wary and frustrated after crisis, would like to move on. We are seeing in markets a bit of a pop after the inflation report came in a little bit weaker than expected on the core level. Coming up next, we'll bring any more details that we get. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I want to bring you the latest headlines. We are hearing of multiple people injured after a shooting in a Sunset Park, Brooklyn subway station. We are hearing that there were several undetonated devices that the FDNY found in the subway station. They are continuing to investigate this. We are viewing images on the scene as a number of emergency responders do come and investigate what's going on. We also know that some of the subways, particularly the B, N, and D lines, are not running in in Brooklyn. We're hearing that from the MTA. Time now for the trading diary, what you need to be watching this week. A host of Fed speakers with Brainerd and Barkin on deck today. President Biden speaking at 3:45 p.m. Eastern. JP Morgan reporting results on Wednesday. Goldman, Citi, and Morgan Stanley following on Thursday. And finally, an ECB rate decision rounding out a short week. We have those ECB officials starting to align the need of rates, dealing with some of the issues with respect to trying to combat inflation in an area where the economy isn't as hot as it is in the United States. Bloomberg's Michael McKee back with us for more. Mike.
Well, Lisa, let's take a quick look at what the issue is for the ECB. Obviously, it's inflation as it is for the Fed. Inflation at 7.5%, the headline number for the Eurozone, way above their 2% target. But it's also growth. There is a problem for the ECB with growth already, even before the war in Ukraine. And now that's raising a lot of questions. You can see the issue there with the Eurozone CPI going up and growth going down at the same time. And they have to figure out, what's the war impact going to be? Does it push up on inflation even more as energy prices rise? And does it hit GDP? A lot of economists predicting a recession ahead for the Eurozone. Maybe not too bad, but they don't know. And then how long does the Russian war last? The longer it goes, the worse the outcome for Europe. So the question is, do they do something on Thursday, or do they just warn about it? The ECB has kept its rates unchanged throughout the pandemic, of course. The problem for them now is that markets are pulling rates higher because of all of this, especially the inflation concerns, Lisa. We're going to be watching to see if the ECB can thread a needle on Thursday.
Yeah, and I wonder from your perspective, having it just quickly, Mike, what statistic stuck out to you in the CPI report that really was the driving news about a half an hour ago?
Well, it's kind of funny because goods prices went down, but that was all because of used cars falling 3.2%, and services prices went up, but that was because airfares went up 10.7%. So neither of those are likely to be sticky. We don't know exactly what it means for the future, but it does suggest that maybe inflation is peaking for now.
Michael McKee, thank you so much, and for all the work this morning as you parse through the report. I just want to bring you the latest on that developing situation in Brooklyn. The New York Police Department is saying that no active explosive devices are currently at the 36th Street Brooklyn station, that is in Sunset Park, where this occurred. There were multiple people, just to remind you of what we do know, multiple people injured in a shooting, and we do know that they are working on trying to understand all of the details. We'll bring you more details as we find them. In the meantime, it does seem like they have stalled the subways in that region, and definitely trying to get a handle of what's going on. Right now, in the markets, what you are seeing is a rally that has regained some steam. The NASDAQ up 1.8%, and you see the S&P up 1.2%, following some declines overnight in Asia and in Europe. And meanwhile, in the bond market, you're seeing yields lower as core CPI came in less than expected, although really interesting to me to see that a lot of that had to do with car prices, not necessarily other aspects of core inflation. This was Countdown to the Open from New York. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the number fever campaign. Del Fierro thought Pepsi's number fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away. Because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interests of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds, they can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are, and they're willing to jump on and, you know, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here
can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. But while that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I'm currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. Very good. 9th class. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, a language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings, as well as the ones described about. Hey, Rachita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be in the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW, and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or a musician in this world. So these are the positive images that are associated with identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidoddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. At Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We were lot of extracurricular activities, and most of them got institutionalized now. So, for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change all that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
They're stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park. And inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planted terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto-mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games. They're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You got to make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So don't forget to smash like and subscribe and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高，但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic. when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce. And he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
没有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him there's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more